All right, everybody. Hey, good morning, good afternoon, and good evening. Hey, welcome to Note Weekend, ladies and gentlemen. Honored to have each and every one of you here join us. I'm Scott Carson, known across the country as the Note Guy, and promise you're going to enjoy the next couple hours with me as we go through the basics of note investing, how to buy, sell, find, fund, flip, and flow, performing and non-performing notes. Now, this is our kind of a high-end version. So if you're new to notes, this is a perfect class for you to kind of learn the basics about it. We aren't going to do a deep dive like we normally would in our 3-day class, but we'll go through about 13, 14 different sessions, do a little bit of a dive into it. I encourage you to ask questions. There are no dumb questions at all. A dumb question is when it's not asked. All right, that's my opinion. But I will ask you to keep your questions relevant and on topic, because we'll have plenty of time at the end, if you have other questions that we don't get through in a specific session, for you to come back and ask during our live Q&A and stuff like that for you too at the end, and then also hang around and network with others as well too for you. Oops, hang on here. Just making sure I've got live streaming here also on YouTube so that you guys can join in there and learn. And also for those that could not figure out the Zoom this morning, can join in there as well. But we are recording. We will repeat this class, restream it across our social medias as well tomorrow. And then, of course, if you can't, don't make it all, we'll also send the replays out to you to join in and learn as well. So I want to thank those that already commented. Let me know where in the country they're joining us from. If you guys haven't done that, do so in the comments roll. We are also monitoring the chat roll on YouTube, so feel free to comment there as well for you guys as well. I would love to learn a little bit about what you've invested in. And so if you could type this in the chat roll, so I have a bit of an idea experience-wise, who's in the Note Weekend training class. If you'll say, hey, I'm a new investor, new to real estate, I've been a long-time investor, new to notes, give me some comments in the chat roll so I know your background in there. Bob's out of sunny California. Good to see you, Bob. That's awesome. Over 30 notes. Debbie, that's awesome. Good stuff. Performing or non-performing. Kevin's a multifamily investor. Welcome, Kevin. Debbie, non-performing, awesome. Judy's done some investing in real estate. That's awesome. Glad to hear that. Good experience. Good. Are you let's see, Debbie, are you doing, you said non-performing, are you doing first or seconds? And folks, if you're watching on YouTube, feel free to comment. We are monitoring those and we'll answer questions off of the YouTube live stream as well for you this morning. Oh, Debbie, you're buying them firsts and then turning them into assets. Okay, so I take are you not looking to hold to get them reperforming then, huh? Glory's out of California as well. Okay, good. Well, we'll go through some different strategies today. I think that you'll take away from. Give you guys a bit of give you a bit of background on me. I've been investing in notes since 2006 was the first one. Well, actually before that, because we were structuring a lot of owner finance notes and getting creative with real estate investors prior to that. But previous mortgage banker, worked for JP Morgan Chase, Bank One, previous financial advisor with Smith Barney and Citigroup and stuff like that for a short period of time. But from 2004 to 2008, I basically started a mortgage company with a buddy of mine. We learned from a couple of note investors that were creating notes through owner financing and also understand the non-performing side of the business because they've been previous mortgage bankers as well. Worked with thousands of investors to help them with their mortgages, cash out refis, stuff like that. And I kind of chuckle with today's market when I see people complain about a 6% interest rate or 7% interest rate. I'm like, well, that's what was a pretty good rate back in those days. But obviously times have changed a little bit. It's definitely an interesting market. We'll talk a little about market conditions too for you. But in 2007, I bought my first note. It was a non-performing note on a little condo here in Austin, Texas, South Austin, off of Old Torf, if anybody knows where that's at. Bought it for 16 grand and was able to flip it for 70 after going through the foreclosure process. So I was pretty excited about that. And I've bought over $1 billion in debt, residential and commercial notes, and got experience in both. And our biggest goal is when we buy the debt is not to necessarily take the asset back. Although anything we buy, we don't mind taking the asset back. Our biggest focus is to get folks reperforming. And I'll talk more about that because of the cash flow and stuff like that. I don't necessarily want to create another job and toilet stands and trash out. There's nothing wrong with that. just not what my focus is. And I look back now, we've helped thousands of investors dive into the world of note investing, spoken thousands of times across the country at local real estate clubs, meetups, National Association of Realtors, cruises, both domestic and international. So I really do love the note business. I really do love it because you can do it from anywhere. You don't need a lot of money to do this. You don't need even your own money to do this. So we'll talk briefly about raising capital and how we go about it. And there'll be some opportunities. Obviously, at the end, if you want to take more advanced training, we've got it available. But my goal here is not to pitch you to death. It's not the run to the back of the room, or I'm gonna give you a little bit of nugget and then everything else will be bigger. You're gonna walk away with some knowledge today that will help you immediately implement into your business, into your real estate business. And if you are interested in being focused on notes, if you're brand new to it, you'll actually be able to take some action and have some success with some things. So I would love for you guys in the comments, what's one thing you're looking to learn today here on Note Weekend? Give me one nugget. What's one of your biggest things, or maybe a fear that you have? Just to type in the chat roll as we get rock and rolling. Okay. I know a big fear oftentimes is saying the wrong thing, or how do you find notes? That's always a big thing. I've been getting bombarded. It's funny. I've been getting bombarded by people in the industry, experts, I guess you could say, or gurus on how we find stuff direct from banks, which is fine, or how we find our sources. We'll talk a little about that today. People often are worried about, oh, do I need money? Do I need a lot of money to do this? And then the answer to that is no. You can leverage other people's money. Bob says, best way to flip for profit to get started and find notes and buyers. Good stuff. Judy, understanding how it works and take action. Okay, good stuff. Great questions. Debbie, funding and how to find notes that you want to get reperforming. That's okay. Very much so. Good stuff. Thank you for sharing. Anybody else want to throw in the chat? Well, feel free to. There are no dumb questions, dumb responses, as I say. All right. Well, one of the great things about, we've been teaching this Note Weekend class for a couple of years now. We started teaching it back in February in 2020. Taught it, I don't know, about 20 different times. And people always walk away and say, Scott, we love what you do with the one-day class because we learn more, but there's so many resources that you give. And I want to go through that first and foremost, give you more resources. Is that okay? No cost to these resources for the most part. There's some of our training stuff I'll talk about briefly. Debbie wants, but we've got plenty of resources for you. All right. I'm a big believer that if you can give somebody a pick and a shovel, they'll go out, those that want to will go out and harvest for gold themselves while you're harvesting for gold yourself. So one of the things we're great and honored about is that we are the #1 investor recommended training for note investing when it comes especially to non-performing stuff. That's what we've hung our hat on. Everybody can do performing notes. A monkey can collect on performing notes. It's what happens when the shit hits the fan that you need to know what to do. And the crap is hitting the fan in today's world with the markets and stuff like that. 722 banks facing bankruptcy potentially. The world is a chaotic place, not just politically wise, but war wise and stuff like that. So anyway, once again, guys, welcome to Note Weekend. Ask questions, but stay on point. All sessions recorded. One thing I do ask is you respect your fellow investors. If somebody has a comment or question, don't be rude. That's the quickest way to get booted from this, is to be rude to somebody. Respect everybody. Treat the golden rule. Treat them like you want to be treated, okay? And I encourage you to network with us and others. At a point throughout the live stream, I'm going to ask you if you want to put your LinkedIn profile, your LinkedIn URL on the chat roll so people can connect with you. Don't do it now, but we'll do it that. And then also at the very end, we'll open up the last 35 minutes to an hour for open networking. If you want to come on live here and talk and share about what your focus is, love to have you. It's always a very positive thing for you to talk about what you're doing. And we'll have, also ask plenty of questions. We'll give you as much answers as we can and time allotted. If you have a question that's not on point with the topic, don't ask it, just hold on to it till the very end. Or you can always shoot me an email and I'll ask the question directly. We do have a Facebook group, Note Nation Facebook group. If you look on there, it's a Facebook group, about 1,000 members plus in it. Also connect with me on LinkedIn. I'm maxed out on the number of connections I can have, but you can follow me. So follow me there on LinkedIn. And if you connect with me, you'll be able to connect with a lot of their note investors because we're connected to just about everybody. And like I said, end of the day, networking and some other opportunities for you. Other resources, free resources. Who does not like free? Give me a free in the chat roll for you. If you're watching this on the live stream on YouTube, You may want to take a screenshot of this or pull out your phone, take a picture of it, because I'm not going to have time to type these links into the chat roll there. Like I said, we've got the Note Nation Facebook group. Every Monday night, pretty much 35 to 40 times each year, we do a Monday night webinar called nonperforming.com. It's a variety of subjects, give you a bit of an idea. We talked about our fourth phase of raising capital, 20 questions to ask note investors, what I would do if I had to start all over, how to find notes, breaking down tapes. We do a lot of great stuff on there. That is completely free. There's also the Note Night in America podcast that you can go back the last 5 years. Episode, I think we just recorded episode 154 on there. So that's roughly 3 to 4 years of episodes. But we've been doing that for over 13 years, Note Night in America. That's a great resource for you. And it is recorded. The replays are also on YouTube channel. And that's our next thing. WeCloseNotes.tv. That is our YouTube channel. We have the #1 note investing channel. If you're not following us on YouTube, just go to WeCloseNotes.tv. You'll see a button pop up. And I see Gloria doing great stuff. Gloria already asking to join the Facebook group. Awesome, Gloria. We'll get you added to that in just a second. Way to take action. I love that. Eleanor, good morning from YouTube. Awesome. Great to see you, Eleanor. But WeCloseNotes.tv. Join it. Lots of great stuff on there. You can catch all the replays for all our videos and all our episodes. All right. We also have, you might want to mark this down. This is my Calendly link. Talkwithscottcarson.com. Book a call with me. I'm going to encourage everybody that's on here today to book a call with me over the next week or so. I love talking with my students. 30 minutes, pick my brain. If you're an existing note investor, definitely are having struggle with raising capital or marketing, whatever it might be, I want to hear from you. These are some great conversations. I love talking to my students. And yes, you can actually get a hold of me. You'd be surprised. I get folks all the time that call me like, hey, I signed up for this note training class with some other guy or gal, and I can't get them on the phone, or they keep giving me the runaround. Look, if you book a call with me, I will talk with you. I want to help you, and there's no cost to do that there for you, okay? Then also later on, we do have some next steps. We do have our big 3-day virtual note buying workshop at notebuyingfordummies.com. We do have a special price for this class. Our next class, you may want to mark your calendar, our 3-day in-depth class is December 1st, 2nd, and 3rd. And we're running a sale at it for half off. All right, we'll talk more about that later on. We have a monthly membership that includes that class and some other stuff at $97 a month. That's called the WCN membership, and you can get signed up for that at noteumbrella.com. That includes access to all of our online classes, replays, and some other special classes you hear us talk about. Note Camp Live, that's our mid-year convention, which has kind of been pushed to the end of the year this year just because of everything going on. But we do have that once a year. We will have that before the year's out. And of course, we have one-on-one mentoring, one-on-one coaching to help you really take your business to the next level. But anyway, let's get rocking into the content, shall we, everybody? Awesome, Paul. Then just go to Note Nation, go to Facebook and look for the Note Nation Facebook group. I think it's notenationfb.com. We'll actually reroute you to it. I believe it will. Let me type that in there. It might not. I believe that's the URL for it. But anyway, let's get rock and rolling here. All right, everybody. So session 2 here, after we've gone through all the free sessions out there. Hey, Debbie, I see that you joined the Facebook group as well. Awesome. Good stuff. Well, it's the different types of notes. There are a variety of things that you can invest in notes. Now, most people, let's first of all, before we get into the individual types, it basically comes down to 2 classifications. You have institutional debt and non-institutional debt. Now, what does that mean? Well, very simple. Institutional debt is debt that's originated by a bank. Pretty much a bank, mortgage company. It's got to be Dodd-Frank compliant. It's, these bigger firms, bigger investment companies, mortgage companies, and banks, basically. That's institutional. Non-institutional debt is owner finance stuff. Lease options, subject to deals. It's more, obviously, contract for deeds are thrown into that. There's nothing wrong with either one of those, institutional, non-institutional debt. I buy both, okay? I've bought more institutional debt over the years than I have non-institutional debt, but that doesn't mean I don't look at it on a daily basis. Doesn't mean I haven't bought hundreds of contract for deeds. It doesn't mean that I'm not looking for subject to deals that I can take down and get creative in the financing and create the debt on my side. I don't buy a lot of owner finance notes right now. All right. I don't buy newly created owner finance notes just because I'm really wanting stuff to see season right now. But I have bought stuff in the past, structured thousands of those deals of the year for investors, help them sell stuff on a creative basis. But we'll talk about some of the ways to structure that stuff later on. Okay. Of course, you have the first big thing, residential first liens, performing notes, performing first liens. That's pretty rampant. You see non-performing, my kind of cup of tea. What I've hung my hat on over the last 16 years is we're one of the major features, folks teaching about non-performing notes, what to look out for. We have residential junior liens, second liens, performing and non-performing. These have really gotten overpriced over the last few years, especially the non-performing side, just because of equity and the lack of inventory compared to first liens. You see a lot of folks that were in the second lien space going into the first lien space or going into just a traditional real estate. Commercial first liens, performing, and commercial first liens, non-performing. A lot of that out there right now. A lot of big stuff, a lot of small balance stuff. That's like one of the hugest opportunities right now is in the commercial non-performing stuff, especially the small balance of $5 million or less, okay? Owner finance notes, performing and non-performing. These are your first liens. We see this stuff. I like to see stuff that's got a year of seasoning. Make sure it's Dodd-Frank compliant, not anything that just originated and then somebody trying to sell it off. It just doesn't make sense a lot of times when you start looking at discount, okay? Contract for deeds. Everybody know what a contract for deed is in here, land contract? This is basically when a seller is selling a house on terms, basically like a 30-year mortgage and a 9.9%, don't really care about the FICO score. But the deed stays in the seller's name until that contract or land contract is paid off. Been a lot of these created over the years, and they've actually been a really great investment. Bought a lot. You see these primarily on the houses that are worth 100 grand or less, 75 grand for less, because it's hard to get a traditional first mortgage or a bank loan on a house that has a little value like that. Okay. Of course, lease options are of a bit of note investing where you have the lease and then the option to buy later on. And then, of course, what's big right now, since we had all these low interest rates over the last couple of years prior to the last 12 months, are subject to deals. Okay. Subject to investing is a great way for you to take over a performing or non-performing residential first lien and start making those payments for folks, or do a wraparound mortgage. And we can talk more about that later on. Okay. But let's move in. So here's where the question I always get from folks is, where should I focus? What should you focus on? All right. Should I just be buying in my state? I should be buying in my one market. And the answer to that depends on where you call home. Okay. I'm a big believer in looking at cash flow and the property. Okay. I don't just target stuff for just the property. I usually target for the cash flow. Now I do, there has been notes that I bought that I knew I was going to foreclose. I wasn't going to get cash flow. So I was buying at the right price. Okay. The cash flow is always important. So when you're evaluating these notes, you want to look at it from a both range. Now, if it's been vacant for a period of time or they haven't paid for 3 years, you're probably not going to get that borrower back on track. So it's probably be more of a property play. If it's owner occupied and still occupied, you still got to consider the cash flow play because the borrower could come back and I think modifying or reinstating a loan, getting the borrower back on track, most of the time is going to be your best ROI. A few cases it won't, but most of the time it will be. Okay. Cash flow is always great, but you also got to realize too, if I end up with a property, but I'm buying this at the right point, that it makes sense if I want to take the property back and keep it. Okay. Return on investment and also your return on time. Think about that. What's the ROI going to be to me for this time? Do I have the time for it or do I need to be more passive? You also got to look at the inventory that's available in states or the asset class. Like if you're, I got a couple of multifamily investors on here. I'm looking for multifamily. Well, everybody and their dog wants multifamily notes. Just because you buy the note on a multifamily doesn't mean you own the apartment. You're the bank, just the debt. You're not entitled to the cash flow unless you foreclose. All right. Same thing for those of us, unfortunately, that are in Southern California. It just doesn't make sense a lot of times to buy it in Southern California because it's way overpriced. Paying 90, 95 cents on the dollar for a non-performing note just doesn't cut it. I had a lady reach out to me. Was it yesterday or Thursday afternoon? Yeah, it was Thursday afternoon. She's like, I got this deal. It's worth like 16 million. They owe like 5 million on it and they want to sell the note. And I'm like, well, if it's in default, and like, yeah, it's in default, they haven't paid. I'm like, well, I'm not going to pay par, which is par stands for full value. For a non-performing note, when I have to foreclose, it's also going to cost me money from investors to buy that. I'm going to come out in the negative. So there's just some things to keep in mind. We'll talk about some of the states that you see most money before I can go from there. Pricing, that's going to vary too for a performing note with equity or performing note with no equity, or a non-performing note with equity versus a non-performing note with equity. It's going to vary a little bit, and also states and foreclosure timeframes too. Like I said, time is of the essence for you, each and every one of you. You don't have to put in 40 or 50 hours a week. You don't have to make this a full-time job. Now, some people are, because they're full-time investors, and that's A-okay. You can easily do that. But it's also too, if you're part-time, how many of you on here, if I can get a thumbs up, or if you want to type in a W or a work, that you have a job, that you're spending at least 20 to 30 hours or more a weekend. If you type that in the chat, roll in the comments. Same thing online on YouTube. Give me a W or a work, or say hell no. Judy says full-time W2. Waddell says work. Awesome. Appreciate it. Good stuff. Gloria, thank you for posting the link in for the Facebook group in there. Appreciate it. Great. Didn't see that. Waddell, Judy, Randy, Gloria. Okay, good stuff. All right. That's okay. Do you all y'all have 10 hours a week that you invest with on the side? Wants to go notes full-time, Debbie says. Okay, good stuff. Randy's yes. Okay, good. Well, that's what I'm trying to get at, guys. A lot of our students start off at part-time. Most of them are part-time investors trying to get the hang of it and building a cash flow or buying notes that can replace their full-time job. Now, not every note that we buy is going to get reperforming. Not every note that we end up thinking we're going to foreclose on, we're going to foreclose on. But the idea here is to build you a path, build you a runway, utilize the leverage you have by having a full-time income with your job, and maximizing your off time to replace that income if you want to leave your job, or to maximize the cash flow coming in from your notes so that you don't have to do work, or you got more fun. Because we all have a why, right? We're all investing for a reason. You're all spending time with me on a Saturday, or watching this later on at a time that's around your schedule, because you want to accomplish something, right? I want to leave my job. I want to make more money. I want to pay for better vacations. I want to pay for my kids' school. I want to, tell my boss, take this job and shove it, whatever that might be. You want to retire your spouse, whatever it might be, you have a why. The idea here is if you know me, or you've been around for a little while, you start watching stuff, you know that I have a passion for helping people achieve those types of goals. If you follow what I teach, you'll achieve that. We've helped so many people do that over the 16 years, or really since the 13 years I've been teaching note investing. If you follow the plan of action, too many P's this morning, to achieve success. But you've got to take that one word. You've got to do that 4-letter word called work. You got to take action. You just can't be an educated idiot. An educated idiot is somebody who all they do is learn, but they never pull the trigger and take action. Taking the action is not as difficult, is not as scary, if you realize you've got a team behind you. You are not alone as an investor. Each and everybody on here, anything that you learn this weekend, if you've got a question, you can pick up the phone or reach out to Scott, and somebody here on my team or somebody in our group can help answer that question for you and help support you. Okay. And if you're looking to make 6 figures and want to eventually do that, there's a video out there that we've recorded every year. This is an older link to it, but it's 100K in 22. I've got another one. It's 100K in 2023. Okay. But if you go to this link, type in your chat in your browser, once you get off and you go back and watch the replays, it's about a 30-minute video talking about how we structure deals, or if you buy one note making $375 a month on that performing note, or that non-performing note, you get reperforming, and you do that for 24 months straight, one new note a month. Everybody's capable of buying one note a month. Okay. You do that for 24 months, you'll have not only over 100 grand in income, you'll have $108,000 in residual income each year for you. Okay. That's not counting any notes that you end up having to foreclose and take back that you get bigger checks on. That's totally fine. But it's a great video. People really, really love that. Eleanor says, I've been an educated idiot. No more moving into 2024. Okay, Eleanor, thank you for saying that. I apologize, but hey, good stuff. Randy just got my first up to by taking action. Congratulations, Randy. That's awesome. Good stuff. Good stuff. All right. Let's get into a little bit of the foreclosure timeframes, because this is going to have a big bearing on where you're buying and where you're not buying. Okay. Now, judicial foreclosures. Everybody, when they're getting into note investing, they come to me and say, I want to buy just non-judicial states. And the reason they want to buy non-judicial states is because they have longer, judicial foreclosures have a longer time frame. It costs more to foreclose. It's going to be $3,500 to $10,000 if you're buying in states like New York, New Jersey. Primarily, judicial foreclosures are going to be east of the Mississippi, just is what it is. You can get them at a bit of a cheaper price point than you would a non-judicial foreclosure, okay? Judicial foreclosures, you've got to go through a process. It's usually going to be at least 6 months, sometimes up to 3 years. You're buying in New York, New Jersey, okay? 12 months in Florida, roughly, give or take a little bit. And that's not counting if they file bankruptcy or delayed and stuff like that, okay? Non-judicial foreclosures are faster. You don't have to go through a court system to do this. Once you're basically 90 or 120 days behind, you can publicize that you're foreclosing, and then you go to the county, and whether they do it weekly, daily, or once a month like they do here in Texas, the first Tuesday, you can foreclose, okay? And it's a shorter time frame, 21 days here in Texas to like 120 days, which I believe is Tennessee. Less expensive, starts at about $1,000 to foreclose, up to about $2,500. And most of the states west of the Mississippi are non-judicial foreclosures, although some states like California have a non-judicial and a judicial foreclosure process. So it's good to know that. You're going to pay a bit of a higher price point, because if you can foreclose in 30 days versus 6 months, you're going to pay a little higher point. Like here in Austin, in Texas, we have the fastest foreclosure time frames. I mean, we do everything fast here. Fast foreclosures, fast highways, and fast executions, right? So if I'm buying a note here, the bank knows they can foreclose in 21 to 51 days, and I'm going to pay a little bit more for it because I'm not going to have to drag the things out. So you have to keep that in mind with your pricing and you're making offers. And here's the thing I tell people: don't just focus on non-judicial foreclosures. Everybody who's brand new wants to do it. Just because somebody's living in a house doesn't mean they're going to drag stuff out in a delay stuff. Many people that live in judicial states want to stay in their house, are willing to start paying on time. And when you're doing your due diligence, you can often find what the motivation level is and figure out if they really want to stay or they want to go. So don't avoid judicial foreclosure just because you are scared. I do avoid New York and New Jersey, but I have students that buy in New York and New Jersey all the time because they're there locally. They've got great attorneys to help out. Okay. All right. Moving on. Licensing requirements. Do I need to have a license to buy notes or invest in notes? And the answer to that is yes and no. Okay. It all depends on where you're buying. Okay. Now, most states, and more and more states are requiring this, is they want you to have a license, a debt collector's license. If you're investing, if you're a note investor in specific state, they want you to have a debt collector's license. But the big caveat, 90% of the time for the states, is that if your servicing company, which is a servicing company, is a third-party company that you hire, they do the collections, they do the collection of monthly payments, the statements. There basically you're go between the borrower. If they're licensed in that state as a debt collector, you're usually covered most of the time. There's a few other states out there, like Illinois wants you to be pay their fee to be a debt collector, and that's okay. Won't stop you from foreclosing. Georgia has a little bit stricter requirement. They want you to be a mortgage broker to do that. And I'm not going to pay to get my mortgage broker's license, so we just work with local mortgage brokers who have that license and then pay them a percentage. Some states like Ohio, they want you to have a debt collector's license separately if you're a second lien collector or second lien investor. Oregon, Washington, Maryland, Massachusetts, and Maryland have specific separate states. They want you to have a separate license. And like I said, Georgia wants you to have a mortgage broker's license unless you're using your self-directed IRA to buy. That's the one exception there in Georgia. Okay, it's a little bit weird, but here's the thing. Don't get so worried about licensing. Like I said, most of the time if you're buying in most states where you can have a servicing company be your exemption, it works best for you. Okay. I'm not buying in Washington State. California, if you're in California, you're buying California notes, South California notes, they want you to license. I'm not buying anything in California. What I can buy something in California, I can buy half of Kansas City at this case for the most part. You know what I mean? Any questions about that before we move on? Like a debt collector's license in Illinois is about $750. It's good for 2 years. There's been legislation on that or court case where if you don't have it, it doesn't stop them from foreclosing in some cases, but it's still good to have. Right? Like I said, some of the states require to be a licensed mortgage broker. You're just not going to be buying a lot of those states for the most part. Okay. And here's the thing. If you have a servicing company, talk with them, find out what states they're licensed to do business. So that you're going to probably have 1, 2, or 3 different servicing companies depending on where they're licensed and where you're buying. Like we've used Land Home, FCI, Madison Management, Covey Financial. We've bought and held from SN Servicing before and then moved them. You know, there's a whole lot of servicing companies out there. You're going to pick 1, 2, or 3 of them and go from there. All right. And servicing will cost you, I think I covered more of this one, but if it's a performing note, about $30 a month. If it's a non-performing note, about $90 to $95 a month, plus any a la carte fees of going out and knocking on doors and foreclose. All that stuff's going to be separate. And then the servicing company is going to charge you a fee for whatever they're able to negotiate, a percentage. Okay. What is available in today's market? This is the $1 million question. What can I find in today's market? Well, pretty easy. Reperforming notes. Somebody wanted to argue with me on LinkedIn the other day. We were breaking down a note case study where the investor buying the note was making an 18+ return on a performing note. And the guy's like, oh, that's whatever. I'm like, no, what it is that the original investor bought the note. It was a non-performing note. They got the borrower back on track, but they bought that note originally at a discount. Okay, they bought it at a sizable discount, like 50 cents on the dollar. They reworked the note, modified it, or got the borrower back on track where the borrower's paying on time now. And now they're selling the note at 70, 80 cents on the dollar to another note investor who's coming in and realizing a double-digit return. Okay, that's a great strategy. If you're looking, you got some money on the sidelines and you want to put it to work, feel free to reach out to me. Hey, I got 50 grand, 75 grand, 25 grand. I want to buy a note that's going to give me a double-digit return. We'll help you find a deal. We'll make a commission on it, but we'll help you find a deal for that. Non-performing notes are ever increasing. We've been seeing increase in non-performing notes well over going on 2 years now since the first foreclosure moratorium stopped during COVID. We started seeing an increase. Definitely seeing it in commercial notes for quite a while. Seeing it increase in residential notes too, as people are having a harder time paying their bills and going from there. Contract for deeds, we've seen that for a while. We haven't seen so many of those like they were created a few years back because values are now above 100,000 in a lot of places. Non-performing commercial notes, like I talked about, we're seeing an increase in influx of that. Definitely. Old notes on platforms. This is one I joke about. There are different note sales platforms out there, and it's okay to be buying notes. I'm not the biggest fan of those, but it's a great place for you to go and take a look at them, make some offers, take a look at things, and kind of cut your teeth on some due diligence, stuff like that. But you got to be careful. Some of these notes on platforms have been sitting on there for a while. We found on 2 of the major platforms that most folks know about that a couple notes have been sold over a year ago, or that have been foreclosure and wiped out and they've never been updated. So be careful when you're doing your due diligence and stuff like that. Okay. And then you'll also see newly originated owner finance notes that really right now, ladies and gentlemen, I wouldn't be buying because of the fact you never know where the market's at. I've seen a lot of newly originated owner finance notes where they over encumber the property. The house is only worth 100, but they're selling for 125, 150. Well, I'm not going to pay 125 for that note. I'm going to buy it at a discount off of current value, not what they think the value is, but current value is. And there's some other things that we'll discuss about that. Okay. You've also, here's a big and a very difficult thing for most people. Okay. And that's why I asked that question earlier on. Who's here's got real estate experience? All right. And a lot of you do. But what screws up deals a lot of times is that you approach it, note investing, with a real estate or fix and flip mindset instead of realizing you got to have a banker's mindset. And that is one of the most difficult things that we see investors coming into. You're buying the note, not the property. Yes, you're buying the note to take the property back, but it's 2 separate transactions. You've got to foreclose or get a deed in lieu to get property back, and you may not get that. Okay. So you got to realize, like I've had people come in and they see notes and they make a bid. I'm like, why are you bidding 25, 30, 50 grand over what's owed? you're bidding 150, but you only have the right to collect because you're buying the note at 100. You're making a stupid offer. Well, the house is worth 200. Yeah, but that you got to foreclose to get that back. You're not entitled to that as the bank. So that's the biggest thing. You got to approach it as a banker's mindset. And this kind of throws people off a little. Well, you mean I'm not buying the property? No. You're buying the note. And here's the biggest thing. You got to quit chasing equity. We as real estate investors, that's one thing we're taught, right? Oh, I'm going to do a subject tool. There's equity. I'm going to control the property. If I get them to deed the property over me, I have all this equity. That's great. Yes, if you buy a non-performing note and you get the borrower to deed the property over to you or do a cash for keys, guess what? That equity is yours. But if they don't and you've got to foreclose, guess what? You're probably going to get overbid at the auction and you're not going to own the property. You're just going to get what you owe on the mortgage or the payoff. So I don't chase equity deals. Very rarely do I chase equity deals. And what I'll do is actually go through a couple examples of where people thought they had equity, don't have equity. They actually got a hedge fund reached out to me and said, Scott, can you help me sell this note down in Cape Coral, Florida? And I'll bring it up and we'll go through that case study and deal later on today. Okay. You got to streamline your products focus. Okay. This is the biggest thing. You can't be chasing 12 different types of deals. This is one of the big fallacies among real estate investors is that new shiny object syndrome, right? I've gone to my RIA 6 months in a row and I've signed up for 6 different programs. I don't know what I'm doing, right? I'm a wholesaler. I'm a multifamily investor. I'm also taking a class to be a land trust expert. I'm also doing fix and flips, doing a bus tour. I'm doing subject to deals and notes. Your poor brain is so confused on what to do and what to do, when to do it, that you don't know where to begin. It's overanalyst paralysis. Anybody felt that before? Yeah, you got too many tools in your tool belt. Focus on 1 or 2 things that work well. Like right now, what works well with notes, non-performing notes or performing notes, subject to deals. We get these lists in from banks. If we can't buy the note at the right price that we want, guess what? We target that list of notes from the bank for potential subject to deals. Okay. Wydell says, yes, it's terrible. I'm all over the place. So I focus on non-performing notes and I focus on performing notes or reperforming. Those are the 2 biggest things. I also a little bit of subject to deals mixed in because it works well with that. Okay. But what you have to realize, ladies and gentlemen, if you're trying to do 12 different things, you're not going to find success because you're not going to have the energy to give them each asset or each class the desired attention and the marketing niche. And you also got to have some patience. Got to let your marketing work for a while. You got to work about there. And that's one of the hardest things that people don't have is patience. They want instant gratification. I want to sign up for the class and I'll make $100,000 in the next 30 days. It doesn't work that way. Note investing is not a get rich quick. It is a build wealth over time strategy. Yes, if I had some big checks, hell yeah, I've had some big deals take place. All right. But I've also had a lot of deals that were singles and doubles. You know, I got $300 a month cash flow, $500 a month cash flow, $1,000 a month cash flow from a specific deal. You know, foreclosed on a deal that took 2 years where I only made $8,000. Another one we made $100,000 plus on. You know, you got to streamline your products focus and you'll be happy. Same thing when you're looking at notes. You don't want these things that are. I had somebody come to me like, I have an equestrian farm. I'm like, that's great. That's not my expertise. That's a very small niche. I'm a cookie cutter, steak and potato kind of guy. Single family homes or condos, you know, duplexes, triplexes, fourplexes for the most part on the residential stuff. And then I look at the non-performing commercial stuff. I'm not going to get outside the box and go crazy with stuff. Okay. Very, very important for you to streamline your focus. Same thing, avoid the shiny objects. Squirrel, you know, it's easy to do that. We're all guilty of that. But when we are thrown options, it confuses us. And you'll never see somebody successful when they give you a business card that's got 12 different things that they do. You know what I mean? You ever seen those people? They got a business card for the 12 different things that they're all the solopreneur. I clean houses. I'm also a mobile notary. I'm also a fix and flipper. I'm also a private money lender. No, you're not. You want to be, but you got to pick something. All right. So I'm going to tell you that avoid the shiny objects. And like I said, cash flow, when you look at a non-performing note deal or a performing note, cash flow, return on investment, that should be your number 1 priority. Every deal you'll look at, especially the non-performing space, if you get that bar back on track, that's got to be your first exit strategy to think about. That next thing is going to be your cash for keys, deed in lieu, and then foreclosure. I don't buy notes with the intention to take them back to add to rental portfolio. That's too much work. I don't want to create another job. Okay. I want to get reperforming notes and cash flow. So I don't have to do the management. I don't have to do the toilets, tents, and trash outs. Okay. Now, do I end up foreclosing on some? Yeah, we foreclose on some, but that's not my bag, baby. Mine is to get people back on track as best I can. Okay. Like I said, taking back the real estate and doing fix and flips are always going to be secondary. I definitely don't want to take back and put them into rentals or owner financing. Okay. Does that make sense, ladies and gentlemen, on that stuff before we move on to the note seller side of things? Questions, comments, concerns before we move on to session 3? Couple questions here. Makes sense in tracking. Okay. David says yes from someone who is a landlord. That's right. Great. Thanks for the comments. All right, let's move on here. All right, session 3 is all about note sellers. And this is like, how the hell do you find, where do you find these deals from, Scott? And this is one thing that we're an expert at. We've done this for 16 years. We're never relying on one source. There's a variety of ways that we find note deals, and we've always done that. The biggest issue that a lot of note investors have had over the years, this is going back to like 2010. I mean, we had a lot of note funds out there, and a lot of people got fat and happy off of just buying from 1, 2, or 3 sources, right? Companies, Granite Loan Solutions, Condor Capital, Lutetium out of Salt Lake City or whatever, Harbor Portfolio. But when those companies went out of business or stopped selling, guess what? They no longer had any deal flow, okay? And that's not what you want, all right? You want to have a variety of sources, and you've got to constantly be finding new sources, but it's pretty easy to do automatically or streamline it. So you only do a little bit of it per week, but it's very, very important the way we do things. Okay. So let's go first. The places to find note sellers. First and foremost, obviously banks. You can reach out to banks directly. Lending institutions. There's places you specifically want to reach out to. We'll talk about those titles, those job titles to look for here in a second. Of course, anybody that's lending, you can reach out to them. They have that. Mortgage bankers, not mortgage brokers, but mortgage bankers. That means like a warehouse line will often have notes, actually quite a bit of stuff, okay? But you can also servicing companies. Sometimes servicing companies will have a trading platform where they're selling notes on behalf of their existing clients who want to move some stuff off their books. Note conferences and conventions, you can go to those. Obviously, networking with other note investors, you may have a few funds that are there. That's a possibility. You also got to be very careful to a note conference. There's a lot of note conferences out there that don't sell anything except just education, trying to pitch people on their stuff, okay? LinkedIn is one of our favorites. We spend a lot of time on LinkedIn reaching out to the asset managers at banks, mortgage companies, by searching for the 4 job titles and then reaching out to those, and we'll share those in just a second. Private sellers, you know, people that many people will chase, like owner finance sellers, people have originated, they'll, you know, pull a list of those off the county records and mail out to them. That's a slower process. I don't really think it's fruitful in today's world. Because you got to do a lot of work and a lot of tire kicking to find the right price, right? Somebody. I like going to the county clerk though and looking for notes that have been sold by doing a search for assignments. And this gives me not only one potential buyer or seller, but often 2 parties. The company that sold the note may have more stuff than the person that buying the note is a note investor. So this is a beautiful thing that we've done for years. We actually did a note night in America last week or the 2 weeks before that of how to find stuff. Of course, foreclosure lists are distressed notes, right? Now, I don't use the foreclosure list to target that specific asset that's going to foreclosure, but I use that as a warm lead into the bank, or use the attorney handling that foreclosure to get into that bank to get their full list of stuff, okay? But we've targeted foreclosure lists. Like I'll get a list in from like, we'll just say like Harris County. Well, I'll get rid of all the large banks like Bank of America, Chase, Citi, Wells Fargo. I'll get rid of those. Deutsche Bank, where I'm basically left with smaller institutions, smaller banks, names, not like single branch offices. I'm looking for banks that have at least 5 branches or greater. But it gives me a smaller list. And those I can reach out to, find the right person in the bank via LinkedIn who's handling that note sale and say, hey, what else do you have on your books that you're looking to get rid of? Not only just in this one county, but all across the country. Okay. And we did a whole Finding Deals webinar. Here's another video you definitely want to watch. It's about an hour long. Great video on the different ways that we find deals. And like I said, you'll see some of these links throughout. There's about another 8 to 10 hours of training videos of watching these videos. And I really encourage you to take the time and watch these extra training videos on different segments to help you understand the note business. There's free, there's no cost. That's included with the class here for you, ladies and gentlemen, because I don't want to take your whole Saturday and Sunday away. Just a few hours here on Saturday or whenever you are watching this to help you learn and you can watch this stuff. But this stuff is very, very important. If you're registered through Zoom here, when we send out the replays, you'll have a link to the manual that also it's the PowerPoint, so you have access to links for you to be able to watch as well. Okay. Bank departments, we've talked about this. There are basically 4 different departments, depending on the size of the institution, that you would reach out to find the sellers of notes. Okay. Now, for your large banks, large institutions, they're in multiple states with usually 100+ branches. They have something called the Special Assets Department. All right. Now, you're not going to call loss mitigation. Had somebody that was talking about, oh yeah, call service loss mitigation. No, you're not going to call loss mitigation. You're going to call the main corporate office. Okay, the main corporate office, not the 1-800 servicing number, but the main corporate office to find the Special Assets Department. And most of them have a Special Assets Department for residential and commercial. Okay, banks and real estate investment trusts, some hedge funds, they'll have something called a secondary marketing department. Okay, that's another name. Secondary marketing means they've gotten a note off the primary markets and they're looking to sell it off on the secondary market to investors like you and me. Insurance companies, REITs, also hedge funds will have what's called a whole loan sales department where they're selling in bulk. This is something to definitely look for. I mean, literally, if you go to LinkedIn right now and type in Special Assets Manager, Special Assets Department, or Secondary Marketing Manager, or Whole Loan Sales, you will pull thousands and thousands and thousands of contacts. You'll see names so-and-so with ABC Funding or so-and-so with Regency Bank. You will find the right person that does that. Now, smaller banks, and by small banks, I don't target banks that have less than 5 branches. You get below 5 branches, they're just too conservative. They can't take a loss. They will not usually deal with selling stuff off at a discount. You get above 5 branches, they'll start seeing more success. Okay. Look for the chief credit risk officer. Now, you're not going to walk into your local bank down here, your Chase or your Wells Fargo, say, I want to buy your notes. They won't even know what the heck you're talking about. The bankers in there, I used to be a banker for Chase. When somebody would come in and ask, we don't sell our notes. Well, every bank does, but Chase, Wells Fargo, Bank of America, they're going to sell in big pools or big trades of $50 million or $100 million in debt, and you're not going to buy that. That's okay. Plenty of other places to buy by reaching out to these banks. Like, I'll give you an example. I was looking at a deal here in Austin, Texas, back years ago on this 4-plex commercial property and got sold out from underneath me because they sold the note and the existing bank was willing to work it out with the borrower. And I'm like, oh, crap. Well, it took me 3 weeks and about 70 phone calls to find out the internal department at Greenpoint Mortgage, which was a division of Capital One, right? Well, once I got a hold of the right department, I had this huge list emailed out to me, this PDF, this 33-page PDF with every non-performing note, commercial note below $1 million balance all across the United States. 33 pages. It was all in 6-point font. I almost need a magnifying glass to read it. But there was so much stuff on there. I was like, oh my God, I can't buy it all. And they're like, no, just buy something. You ain't got to buy it all. Buy something. And that's the thing. Most of these banks will have multiple assets. Some will just have one off, and that's fine. Make that connection. If it's not something you're looking for, it's not something for portfolio, that's okay. Just tell them, say, hey, I appreciate it. Not exactly what I'm looking for, but can I please keep me in mind for the next stuff? Or I may have somebody who might be interested. Do you mind if I pass it on? And that's the whole reason I started teaching back in 2010, ladies and gentlemen. As I know there's plenty of inventory to go around, so I started teaching note investing so that folks would understand this aspect, but also when you got deals sent to you, you didn't know what the heck you're looking for, guess what? Hopefully you reached out and called someone, all right? Part of the reason we market is just so that when people come across something, they can reach out and talk to me, and I can help you make money out of it. If it's a deal, I'll help you out with it. If it's not a deal, I'll tell you it's a dud right off the bat, okay? There are some websites to help you find notes too. You may want to jot these down and take a screenshot. Landguide.com has been around for over 40 years. Landguide.com tracks the banks have been sold, bought, and sold for years. It's coming back. It was actually kind of down for about a year as Richard Lane, the guy that founded it, passed away, and they were figuring out the company was kind of reorganizing. But it's back for about $130 a year. I can log in. I can do a search and find internal departments, a special assets manager, commercial, residential, these bigger institutions, or find a corporate office, start dialing. I've even been able to pull a list of about 700 names, emails, and contact names for asset managers at banks that can reach out to. So it's really, really worthwhile. Bauer Financial. Bauer Financial is an independent third-party company that tracks the quarterly reports that banks and credit unions file with the FDIC. I'm not targeting credit unions. It's one thing I don't really waste my time with. But I do have Bauer Financial pull a quarterly report for me that tells me which banks have gone down in value or which banks, what kind of percentage. I have them basically, I pull a report, I pay for a report every quarter. That's 5 banks that have 5 branches or greater. Okay, so it's about 1,600 banking institutions, and that's like $340 month quarter. But it tells me literally the percentage of their portfolio that's in bad. You know, is it how much of that's residential, how much is commercial, dollar amount, even distressed multifamily too. Okay, credit unions don't. Great, Gloria and Judy asked the exact same question at the same time. Credit unions just don't have a lot of stuff. They're just too small. They're not usually originating mortgages. They're doing more of that personal credit, you know, car loans, signature loans, stuff like that. They just don't have a lot of mortgage loans. Okay. So they're just not, I want to fish in the big ponds, not a small little pond. Okay. If I'm going to be down for dollars or reaching out, asset managers, I'll make sure I get my time is worth it. It's not saying a credit union might not have something from time to time, but most of the time they're not going to have anything they can sell. Now I've bought auto debt from a credit union. I bought a car note and repoed that, done that before. Okay. So that's something to keep in mind. But Bauer Financial, it's worth the $340 a month once a quarter. Take a look at it. FDIC.gov. This is the government's website. You can go there and see banks that have failed, asset sales on there. It's a little bit bigger stuff. You can see banks who have bought banks, you know, who bought the bank and how to find stuff. Pretty easy to take a look at. There's no cost to that. The only Lane Guide's about $135 a year. Bauer Financial's $304 once a quarter. Texas Savings and Mortgage Lending. I put this down there because a lot of states have individual licensing institutions. Like with Texas, it's the Savings and Mortgage Lending that monitors mortgage bankers, mortgage brokers, and lending companies. Like with California, it's the Department of Real Estate or the Department of Insurance. It just varies. Many times you can go to the state licensing websites like this and reach out to them, and they can send you a list of everybody who's licensed to do business. Texas Savings and Mortgage Lending used to allow you to download the list of every mortgage banker and mortgage company in Texas and emails and contact names, which is really great to reach out to because you could find stuff all the time of stuff that mortgage bankers had that were on their books they're looking to get rid of. Okay. You got to email them now to get the list. Now it's not something that you can download easily like it used to be. Okay. Same thing. I think Illinois does the same thing. Florida does the same thing. You just got to reach out to the mortgage lending departments for the state to see if they will, it should be a freedom of information, who's licensed to do business in the state. Now, a lot of states will ask you to go to the NMLO, the national website, to take a look there. You can do that. It's not going to be any way for you to pull a list for the most part. It's kind of a pain in the ass. Scotsman Guide. Scotsman Guide's been a resource I've used for 20 years. He started using it in the mortgage lending business when we owned the mortgage company. It would basically come as this big newsletter and would tell you all these lenders doing these different niche programs. If I need to do like a mortgage on a church or a retail center or a different program for a credit challenged borrower or an Alt-A or subprime mortgage, it was a great like ESPN the magazine. Well, it's no longer a physical publication, but you can go online and do a search there for strategies. If you're looking for a residential loan or commercial lender, I go on there, specifically commercial, and I run a scenario. Like if I'm looking for like self-storage facility or an RV park, or I can go and type a scenario and it'll give me a list of lenders that lending on it. And that's the lenders I reach out to see if they have anything non-performing on their books. Okay. Hope that makes sense. Platforms. This is where everybody likes to get started. And this is an okay place to get started. Do not make these platforms your sole source of notes, because you will get in trouble because they won't always have a lot of stuff. PaperStack's been around for a few years. They only have, I don't know, they had like 160 when I looked at the other day, but only 6 or 7 of them were non-performing. And they have a lot of land loans on there right now, not a lot of residential commercial stuff. Watermark Exchange will have stuff occasionally. It's not really big anymore. The SN Servicing sends stuff out. If you go to SN Servicing and look for investors, David Polio is the trader there. He's a bit of an ass, but anyway, it is what it is. They do send stuff out pretty regularly on the residential side. Dev Expert's kind of a newer website last year too. You can take a look at there. They'll have some stuff. Here's the thing. Most of these platforms are not going out and finding stuff. They're relying on investors like you to throw them stuff. And if I was any of these guys, I would be going out to the banks directly to find lists that they could target. Fixednotes.com, Rob Hytha, you can take a look at that stuff. He's got some stuff from time to time. The better stuff you're going to see is like 10x and auction.com. They've got some commercial stuff, obviously. And I've used their websites, auction.com, to actually find lenders who had more commercial stuff they're looking to sell. And so if I see a note on there for auction, I don't bid on that. I go and do a research to find out who's the bank that holds that. And then I reach out to that bank directly to see what else they have on their books. Mission Capital and DebtX are 2 of the bigger ones that'll have stuff. Note Trader Exchange, I've never bought anything from them. Supposedly they've got some stuff, but kind of difficult to deal with. But Mission Capital, you're gonna, that's a big thing. You're probably not gonna buy from them because you're gonna need to be buy a portfolio. And DebtX, they're gonna charge you $500 or $1,000 registration fee. But those are some of the platforms. You can start looking at these platforms and start looking at deals. But going direct to the banks, one of the great things that we do with our one-on-one coaching students is we actually provide lists and contact information of asset managers, emails for them to reach out to get stuff sent to them on a directly basis. And that's what we've done for years, is literally built a big database and drip market once a month, once every 2 weeks, send an email out to asset managers. Hey, what do you have on your books? We're still buying. What do you have on your books? And it's really helped us maintain as a note investor for 16 plus years, because we're always buying. Okay. Does that make sense, everybody, so far? Good. Let's do this. Let's take a quick little break, get a fresh cup of coffee, do a bio break, and be back in, let's just do a quick 5-minute break. We'll be right back, okay? All right, guys, we'll get back here and start in just a second. Now, one of the things I'll show you guys here in a second is the reason I went through the LinkedIn stuff, or what the job titles are. We'll show you kind of in a few minutes here what to say, what not to say on LinkedIn, okay? Yes, Paul, there is a replay. There is a replay. We are live streaming this to YouTube, so you can go back and watch this on YouTube anytime you want. We'll also send a link out with all the different sessions divided up. Okay, so yes, make sure you go to weclosenotes.tv though, and go ahead and subscribe to the YouTube channel so you can actually go there. So weclosenotes.tv. You're welcome. Give everybody another minute to get back from their little morning break here for a second. If you're watching live on YouTube, we'll take a break probably after session 5 and a 20-minute break so that folks can grab a little lunch, nibble, come back. And what we'll do is restart the YouTube's live stream with a second video stream. So just if you get cut off, don't be surprised. Just hang around on the YouTube channel on the side. Hey, Sherry Getler, what's going on? You disappeared. Hope all is well. Serby, hey. Randy Hodge, good to see some folks. Randy Durr, Trisha, Michael, good stuff. Got some good folks on here. Great to see you. Jim Shibley, what's up, buddy? Kenneth, good stuff, everybody. Joanna, Josh, Frank, hey, Ed. Alfonso, good stuff. Good morning, everybody. Judy, there's 2 Judys. Larry S is 1. Okay. Yeah, we took care of that deal. We had people fund that deal right off the bat. Thanks. Randy Durr, good morning. Iris, love from sunny San Diego. All right, good. All right, should we get rock and rolling back on this? It's going well, Kenneth. Good to see you, buddy. All right. All right, guys and gals, back from our short little break. We've got session 4 here, note scripts. One of the things I always like to talk about first in the previous session was where to find them. We talked heavily about the 4 different departments that you can find on LinkedIn, and I'll show you what to say, what not to say here in a second. But this is one of the most important things when you're reaching out is this session here, okay? Because you can say the wrong thing pretty easy and screw yourself up. You can also just call back. A lot of folks at banks, asset managers, one of the things I used to really worry about was when I would dial for dollars, and I would make 50 to 100 phone calls a day. We've actually done that in the past and done that live with our Calling Banks masterclass that some folks get access to, which we'll share that later on. But I still dial for dollars. So I screw up. I just hang up and I'll call that guy or gal back the next day, or just say, oh, my phone screwed up, whatever. It's not that big a deal. But what you say to banks to find deals are not difficult. So, speaking of example, so we did, if you've been around, you've probably seen me make phone calls to banks for a while, 4, 5, 6 hours. We'll all make phone calls. You'll hear what I'm saying. You'll see who I'm dialing, stuff like that. We did this back in March. It was $199. It's available for folks that are part of our WCN crew, our monthly membership. And then, of course, our one-on-one coaching students get access to this as well. So great stuff. You actually hear the phone calls, hear the conversations. It's a lot less intimidating than most people make it out to. But if you're interested, hey, that might be something to think about for the WCN membership for you. Or if you're on faster access or faster success, talk with me about our one-on-one coaching. But anyway, what and what not to say when talking to the asset managers. These are very important, okay? You're going to have a basic elevator pitch. I say the same thing. Hey, my name is Scott Carson. I'm with a company called We Close Notes. I'm a note buyer. I'm buying for my own portfolio. What do you have on your books that you're looking to move this quarter? Got anything that's ugly? Got anything, any hair on it? Residential or small balance commercial? We're a boutique firm, and we buy in roughly about 30 states, most of the major markets across the country. That's pretty much my elevator pitch, okay? I'm looking for my own portfolio. Even if you don't have money, even if you're hoping to wholesale it, you're still buying for your portfolio, okay? You got to realize that. If you're going to wholesale a note, you might as well talk with your wholesale buyers about potentially funding the deal because you're going to make more money, okay? I'm looking for my own portfolio. I'm looking for something with some hair on it. What does hair mean? It means it's sitting on there, it's grown a little bit, not like mold, but pretty close. We're looking to work it out with the homeowner. So one of the things that we like to do is try to work it out and modify if we can. All right. Banks want to hear you're doing good. Okay. We're looking for such and such first liens, $100,000 up to $1 million in these markets or states. Now, here's the thing. I don't get specific. You should not call and say, I just buy in this one market. Oh, I'm just looking for stuff in Austin, Texas, or I'm just looking for stuff in Wisconsin. Oh, I'm only scared because I don't want to buy in Wisconsin. No. You want to do, ladies and gentlemen, is realize you want this asset manager just to hit the download button where they can download a spreadsheet and then email you the spreadsheet. You don't want them to go looking for zip codes or cities or counties. They're not going to take the time to do that. They're busy, okay? You want them to make it easy, download, and then email you the spreadsheet, and then you can look at this spreadsheet. But that spreadsheet's so valuable. I have people, students of mine, it drives me bonkers. I got one guy right now, great guy, doing well. He's already closed on 93 notes. And I'm like, he's trying to take the whole thing down himself. I'm like, that's good. But there's other people out here that would buy that off you. Buy 40, 50 of them and then market the others and let somebody else buy some if it's those that don't fit your portfolio. Okay. That's the whole thing. Just get a spreadsheet sent to you. If you get a spreadsheet sent to you, great. Even though there's nothing on there you want to buy yourself, you can make money off it. Work with me on it. Do not say this. These are like the golden commandments. Don't say I got $20 million a month to buy. Nobody believes that. I'm a buyer's rep or I'm a buyer's mandate. Bullshit. I can't tell you how many times I've been on conference calls where there's a daisy chain, 3, 4 people removed from the actual seller, and the actual seller buyer wasn't even on the damn phone. Okay. So if somebody calls you up, and you will have this happen, there's some idiot out there teaching people to do this, and it's the wrong thing to do. Okay. And I call people on their bullshit. I'm like, bullshit. It sounds fake when you say, if you had 20 million a month to buy, you wouldn't be dealing with me. Okay. I'm looking for notes and foreclosures. No, you're not. The notes and REOs are in separate departments. If you call and say notes, just say notes. If you're calling and say REOs, guess what? You're going to get forwarded to a voicemail box that's going to say, call the listing agent. Okay, so don't call them if I want to buy portfolios or I got buyers that want to buy portfolios of REOs. Guess what? They're not going to happen. Because all the REOs, the banks are just going to list with agents. There's not this big wave. What's happening with everything's where's the foreclosure wave at? Well, it's not going to happen. They're going to get sold as notes to investors like me, funds like what we have, other funds, and they're going to work it out. They're not going to have this huge wave of foreclosures. Okay. We just did a most recent episode of the Note Closer Show on that. Where is the foreclosure wave at? Check it out on any way that you listen to podcasts, or check out the YouTube channel with it as well. Okay. I'm looking to broker or wholesale. Don't say that. Oh my gosh, they will get hung up on. You'll get blacklisted. They don't need brokers. They don't need people to wholesale. Doesn't mean you can't broker or wholesale, but say you're buying for your own portfolio. Bob, I know that was one thing you were worried about. I want to learn how to wholesale. That's great. You probably want to learn how to wholesale because you don't have a lot of capital. That's what everybody said. I don't have any money, so I'm going to wholesale. That's fine. But in a later session, if you for you to market to make pennies, you might as well market to raise capital and make the lion's share. Okay. Buy for your own portfolio. Let's everybody hear you say that. I'm buying for my own portfolio. Thank you. I heard you all the way across the country, everybody. Say it loud. I'm buying for my own portfolio. Okay. I represent a buyer. You want to be the buyer, your firm. Okay. I'm looking for anything. I want to buy first, seconds. No. You're not. I'm buying firsts on residential and small balance commercial. And small balance commercial is under 5 million. Are you the right person that handles this for the residential side? Is there somebody that handles this for the commercial side of the bank? Okay. And buy my own portfolio. Okay. Like I said, don't say I'm looking for just stuff in Phoenix or Austin or anything. You get any specific like that, just don't worry about it. You got to realize there's this amazing tool called Google that can help you do due diligence just about anywhere. There are also vendors that will help you do your due diligence anywhere in the country. Okay. From Columbus, Georgia to Columbus, Texas. All right. From San Diego, California to San Diego, Texas, anywhere in between, from Portland, Maine to Portland, Oregon, okay, to Portland, Texas, okay? There are vendors that can help you put eyes and ears on this stuff. You aren't just limited to your backyard. You got to think and realize that the United States is your market, not just one state. Now, if you live in Ohio, Michigan, Indiana, or Illinois, okay, or even Florida, I'd throw Florida in there right now too. There's plenty of stuff just in your backyard. Florida is a little bit tricky because of the insurance costs and it's a little longer foreclosure time frame. Indiana's not bad. Michigan, Ohio, those are three of my favorite states. And some, judicial and non-judicial. Illinois is a judicial state. I don't buy in Cook County. Okay. Plenty of stuff for you outside of your market, ladies and gentlemen. Great stuff. And if somebody's living in a house and wants to modify, guess what? You use servicing companies. You don't have to go out and knock on the doors and show up and do an open house and rehab the property. No. We don't want to rehab stuff. And no toilet stands and trash outs, ladies and gentlemen. We want to be a bank. Okay. Now, here's the thing. If you're going to pull a list or dial for dollars, there's some specific times that you want to reach out to these bankers. Like if you pull a list off a Lane Guide or you pull a list from the state licensing websites that's got email lists on here, best times to email bankers. Okay. Don't do it on Monday. Don't do it on Friday. Email them Tuesday, Wednesday, or Thursday. Wednesday, according to the American Marketing Association, is the #1 day to have an email opened. Okay. Tuesday, 2nd, Thursday's 3rd. Okay. And we have a system. If we email on a Tuesday morning, we follow up again on a Thursday afternoon. Okay. And you want your email to go out to them between 10 a.m. and 3 p.m. If you use a service like Keep, which is a CRM tool, that we use, we love them, they're great. We can actually set this up and pre-schedule it to go out at the right time. I could write it on a Sunday night and it could go out Tuesday morning at 10 a.m. and then resend it out again without me having to do anything on Thursday to those that didn't open the first time around. Okay. Now you'll see when you send an email blast out, you'll usually see somewhere between a 10 and 20% open rate the first time out. Okay. Never, ever, ever send an email from an info at. Okay. If you've got an info at email, get rid of it. Why? Because spam filters pick that up, or contact us, or sales at, make your name Judy at Jim Bob's Notes, whatever. You get what I'm saying? Bob at BMA Funding. It's totally fine. Okay. But don't do info at. That's the worst thing you could send it from. Spam filters at these banks and institutions are going to filter and they're never going to see your email. Okay. That one little thing will give you an extra 10 to 20% bump in open rates. Okay. So you send it out Tuesday morning, you get 10 to 20% the first time. You resend the same exact email to those that didn't open the email 48 hours later. Usually, like I said, if we send it first one Tuesday morning, we send it Thursday afternoon. Okay. If we send it first one Thursday, then we send it Tuesday morning, not over the weekend. Okay. And if you send it a third time to those that didn't open, you get somewhere between a 1 to 4% open rate. So you're going to see somewhere between a 16 and 32% open rate when you start sending emails out. Now that's pretty good. All right. Those folks that open, great. You follow up with them with an email, with a LinkedIn or a phone call, a multiple touch approach. Those that don't open, guess what? They get the same email sent again later on in 2 weeks later, or follow up with them. Okay. This is one of the things that will make you rich if you just do this on a monthly basis. Now, how many of you are in here by a raise of hands are only going to be an investor for a month? Raise your hands. What about 6 months? What about 1 year? I know it's a stupid question because we as real estate investors, we're going to be investors a long time, right? You never stop being an investor. then what you have to realize is so many people out there, they only market like they're going to be an investor for a week. Yes, this is marketing. Emailing, calling is marketing. You don't give it time to fruition. This is not get rich quick. 80% of sales happens after the 5th contact. 50% of people never follow up after one time. So this is part, if you want to build long-term wealth, long-term lead flow is just getting a habit of reaching out to asset managers once a month, twice a month. Just following up, just touching base, sending an email, following up. It's so simple, but most folks will never do it. Keep.com. And if you email me, I believe we have a discount code for you. Keep.com is who we use. They're really great. And if you go to keep.com, their pricing on their website is not what our students pay. Our students actually have a better price. We're just one of their biggest fans. And we do a lot of work with them, okay? But you need to have if you're going to be any type of investor, you got to have some sort of CRM, customer relationship management software that you can send emails out, see who opened it, tag them, follow up with them. We use Keep for our investors, our asset managers, our deal flow, our podcast as well. So many things we use with that for. So it's a really great thing. Now, besides sending emails out, we do, guess what? We do dial for dollars. This is one thing I used to do right off the bat. Before LinkedIn was heavy, before at a CRM, I would pick up the phone and I would call for 4 to 8 hours. And the best days to call asset managers are Tuesday through Thursday. Same thing like emailing. So we send an email out and somebody opens it, we follow up with a phone call with them. So I call between 10 and noon and 2 and 5 p.m. their time. It's a little bit different than emailing, but something to keep in mind, 10 to 12 and 2 to 5 their time. So if you're on the East Coast, you could get off of work and call people on the West Coast. If you're on the West Coast, you can wake up early and call people on the East Coast. All right. You have to expect to leave a lot of messages. Most of the time you're going to have a voicemail box and it's just a touch base. And yes, leave voice messages. Otherwise, you just wasted your time. Let them know that you're calling. Repetitive. Remember, 80% of sales comes after the 5th contact. All right. Somebody want to argue and I don't leave voice messages. Well, then how the hell do they know to call you back? How the hell do they know that you called, right? They don't, silly. Realize that. Think. Speak clearly, slowly. You want to have an elevator speech. You might even want to write out your script and say it. And repeat your phone number twice or repeat your email. Get something simple to repeat. If you've got an email address that's 105 Tiger Lily at yahoo.com, get you a professional email. Okay? Keep.com is the best CRM. That's who we use. Keep. And what's great about Keep is they do a lot of training. They got people you can get on the phone, help you walk out with things. You can set up automatically things to happen. It's really great. We're not going to go into that today, but anyway. But same thing, like I can say, hey, my name is Scott Carson. I believe you're the right person who handles these non-performing note sales for ABC Bank. I want to talk about what you have on your books that you're looking to sell off this quarter or next, either on the residential side or small balance commercial. I'm buying from my own portfolio. I've been doing this for years. Would love to talk with you. You can reach me back at 512-585-3810. Once again, 512-585-3810. I'm buying in most of the major markets. Or you can reach me via email at scott@weclosenotes.com. That's scott@weclosenotes.com. All right. I can spout that out just like that. I even recorded a short video, a 1 to 2 minute video that when I send out a link, when I send out a connection request at LinkedIn, I send that video. When I send an email out to asset managers, I include that little video. It helps people see who I am, see my experience, and go from there. Okay. And the most important thing is smile while you dial. Yes, it's intimidating, that 1,000-pound telephone that we're all scared to talk on, but we'll text the hell out of it. We'll like everybody's post, but we won't do anything ourselves. It's not scary. Just get in a habit. Most of these asset managers are glad you're calling. All right. You might get a few on a bad day, but don't let that stop you from dialing for dollars. Okay. And expect. This is basically the average numbers, the law of averages. If you make 50 phone calls, which you can do that over a 3 to 4 hour period of time, sometimes faster, sometimes slower, You're probably going to talk to around 14 individuals. You'll probably end up signing around 3 to 4 NDAs, non-disclosure agreements, that they're going to sign before they send you anything. And then probably one tape out of that bundle at any point. But that one tape might be one note, or it might be 100 notes that you get every month or every quarter. It's a whole lot cheaper than direct mail or postcards or bandit signs. Notice I've not said anything about mailing postcards or letters out. We don't do that. We're in the 21st century. Most investors are used to mailing out thousands of postcards to get one potential deal, right? Screw that. That's stupid. That's marketing like you're in the dark ages. I want to market smarter so that when I get a source, they are feeding me on a regular basis. You just have to give it time. Some of you are so caught up in the old way of doing business. Well, this is just the way we've always done. We don't know any different. Well, you got to start doing things differently. You got to start marketing like it's the 21st century, and Scotty is here to beat me up. I'm giving her all that she's got, Captain. All right? I'm here to help you if you will just apply. Like I got one guy reach out, I want to do all this stuff. I'm like, well, then guess sign up for that. Well, never signed up, and that's fine. His loss. Don't tell me you want to do something and then not be willing to take step 1, step 2, and step 3 to get it done. Okay? And it's like, I know we all get bogged down with life and family and politics and all the crap that's going on. You got to take care of yourself first. If you're not taking care of yourself and doing something for your future, for your family, and you may put your why ahead of everybody else's, then you're never going to achieve the type of success you want to achieve. And here's the thing, ladies and gentlemen, you've got to follow up with these folks. Follow up, follow up, follow up. Now, I know some of you say, well, Scott, you said if I work, it's okay. I don't spend for it. You don't. Send an email. Jump on LinkedIn. Okay? There's ways for you to automate a lot of this stuff on a regular basis. Send an email, make phone calls when you can. If you can't make phone calls, connect on LinkedIn. There's a service called Octopus CRM that automates a lot of this asset manager outreach you can use. I can't use it anymore because I'm capped out at 30,000 connections. But Octopus, you could reach out to 20 to 50 people a day. That's great. And that works with the free accounts. Okay. Repeat, repeat, repeat. Touch, touch, touch. I've had asset managers that I've emailed and talked to. I would talk to them like once or twice a year, and I would email a month for a year or two before they had anything. Like, hey, I finally got something I want you to take a look at. Or I know so-and-so's got a tape. I told them about you. Why don't you reach out to them and see what you got? And it's $1 million relationship. Because look at it this way, ladies and gentlemen. When I called Capital One and I said it took me 70 phone calls over 3 weeks, okay? And I got this big listing, right? And I ended up finding one deal in sunny San Diego on Mansfield Drive. It was an 8-plex small apartment complex that I flipped that note. I got under contract for what did I get under contract for? $375, and I flipped it for $415. It was worth like $700 back in the day. It's probably worth 1.2 to 2 million now, but anyway. We flipped it for $35,000 in 30 days. So basically every no, if you take $35,000 and divide it by 70 no's, each no was worth $500. So for every phone call I make, every no I get, I know it's worth somewhere between at least $500 or $1,000 every time I get a no, because I'm getting closer to one deal. Not having to make any money. I mean, pay any money for postage, shipping, any of that crap. No postcards. It's just dialing for dollars or using LinkedIn free resources to find deals. Leave a phone call, send an email, reach out to them on LinkedIn. Hey, I just left you a voice message, just shot you an email. I hope you're the right person. If not, who is? Okay. Now, not every asset manager is active on LinkedIn. That's fine, but there's plenty of them out there. Okay. 80% of sales are made after the what? 5th contact. Got to keep that in mind. Understand that. And here's the thing. When you start talking to people, make a list of who you talk to. Maybe you won't call them every month, but you get the right person on the phone. They got the email and they've got stuff, or tell you to follow up with them at once a month. Hey, just wanted to touch base with you, Jim. Hope all's doing well. What do you got? See if you had anything this month. Nothing long. And they still get that monthly email that you send out, but they get a separate email for those that you've talked to. Okay. Just touching base. And yes, you can watch me call banks for hours. There's a free calling asset managers list where I'm calling for 4 hours by that link. Okay. You can hear yours truly down. And I still do this. Okay. Still do this on a regular basis because I know it works. That's how we found amazing deals and followed up with deals. That's how we teach our students. And those students that do it, they find great deals that nobody else has seen. Okay. Because most of the asset management banks are asset management banks. They're not marketers. They're not note sales guys. They have a list. They don't know what the hell to do with it. I've got banks. Well, we've never sold a note before. How would we do that? Well, this is what we would do. And we've helped a lot of folks. I've actually, one of the funny things, I was on a conference call with an asset manager out of a Missouri bank a few months back. We got to talk and he's like, wait a second, I know you. It's like, you do? He's like, yeah, I was just looking at LinkedIn and I found you. I follow you. I'm connected on LinkedIn and I like your videos about note sales, note investing. I've learned something in my 17 years as a banker. I've learned something from you about note investing I didn't know existed. That's a relationship that was built before I ever made a phone call. You have that stuff happen. And you never know who's watching your stuff. And like, it takes time, ladies and gentlemen, just takes time. Just a little bit each day, a little bit each day, a little bit each day. Your emails you can automate, your LinkedIn you can automate with Octopus CRM. The phone calls you can't really automate, but if you don't have time to do it, that's okay. At least do the LinkedIn and the emails and then make phone calls when you can to those that open the email, okay? We have our upcoming workshop, notebuyingfordummies.com, December 1st, 2nd, and 3rd. We spend a full day on finding assets, full day on building lists and showing you how to find these asset managers and me walking you through step by step how we've been doing it for 16 years. The second day is all about funding, raising capital, marketing, how to, if you're a wholesaler, how you can become a true investor by helping you raise capital. We'll show you how we tap into hundreds of IRA investors that are looking for deals to fund or to partner on. Sunday is all about the flip and the flow. We'll talk about exit strategies, how to structure your deals, and we'll even break down a tape. It is literally 3 days, roughly about 24 hours of content, and it's yours truly. I might have 1 or 2 vendors on there, but you can get signed up for it at notebuyingfordummies.com. I highly encourage you. Usually it's $9.97. We are running a special 50% sale through the end of the year. It's good for you and a spouse. You don't have to wait till December 2, or if you can't make it December 1st, 2nd, 3rd, it's the replays are included. So you can actually watch the replays at your time. If you get signed up today, you'll actually get the replays to the April class. We did via Zoom, and then you can start watching that and learning now. We did a class in between there, but it was a live class here in Austin, Texas, and we'll be hosting a live class in Austin in probably late January, early February, and your $495 ticket price gets you a ticket to that too. So you get our Zoom class, our live Zoom class, replays, and then also an in-person class here in Austin, Texas. Pretty cheap for $495, and that includes you plus a spouse. Okay, not an extra price, but $495 for you 2 people come in here, or partner in a business or an LLC. So go to notebuyingfordummies.com and get signed up for that and take advantage of that. Okay. Now we also have our monthly membership that allows you to spread your costs out. It's the biggest bang for the buck in the industry, $97 a month. We call it All You Can Learn Note Buffet. It's included a ticket to the virtual workshop, which is usually $997, a ticket to our conference Note Camp, which is $399. Access to all of our past Note Weekend trainings and anything we do live in the future, you can attend at no additional cost. Our bank training calls, our masterclass on calling banks, our masterclass on wholesaling, our masterclass on bank due diligence, and some of the other stuff that we have going on. All that's included. Vendor discounts. We also throw we also have a message board base camp group for everybody to join in, share questions. We share note tapes. We do weekly coaching calls every Monday at noon that are recorded for you to watch. It is literally, if I can't save you or make you $97 a month, then you're either not tapping in or I'm doing something wrong. Okay. Sign up for this. It's designed to spread your costs out for low cost per month, $97 per month over the year. All right. Noteumbrella.com is the way to look at that for you. And it's well worth the investment. Like I said, guys, we'll go through deals. You get tapes in. We'll help you. We'll share tapes on there. We'll break down deals. Really, really, one of the things we've had for a couple of years now, and it's really a great feature. Noteumbrella.com. Okay. Before we dive into markets and pricing, I wanted to share something with you and walk you through a little bit on what I was showing you earlier, talk about earlier on LinkedIn. Okay. So if you go over to LinkedIn, Somebody wanted me to put that in there. So it's http noteumbrella.com for the WCN membership. Yep, and HTTP note buying for dummies. You sign up for the WCN membership at $97 a month. Guess what? You get the class. It's included. You don't have to pay the additional $4.95. All the bonuses are included in the WCN membership. Something well worthwhile for you guys. We try to make it stupidly simple. All right. So if you go over here and just do a search, let's just do it. Special asset managers. Just type that in there. Boom. Asset manager, special servicing. See, he's an REO asset manager at Lima One Capital. You're a hard money lender. At Apex Bank, George Smart. I would do seconds on here, second degree, so you're not connected. And there's about 8,600 second degree connections. Okay. If I take away, if we do second and third degree, 145,000 people with the title special asset manager. Okay. And what do? You reach out. Let's see here at special assets in the Pittsburgh area. Let's just hit connect to Jeffrey. Hey, Jeffrey, add a note. I wanted to reach out to see what types of, see what you might have on your portfolio as far as NPNs that you are looking to move this quarter. I'm buying for my own portfolio and would love to talk. Okay. Now, usually I include the link to the video that I have, but that's a very simple. Copy paste that. Copy paste. Copy paste. You can knock out 20 to 100 connections at night. And one of the things I've done before is when I'm sitting in front of the TV watching football, I'm doing that on my phone. I'm literally connecting with people on my phone, sending messages to them that way. Hey, what do you have in your books you're looking for? You can do that at any time, day or night. And that's a great way for doing it. But so that's special asset management. Let's look at secondary marketing. Oh, helps if I typed it in right. Secondary marketing, same thing, 70,000 plus results. Or some home lending, secondary marketing, Zons, bank. Oh, Jim, there we go. Let's do this. Hey, Jim. The one thing when I get an email that bounces back when the person has moved on, and drop a name. Oh, I used to deal with so-and-so, even though they moved on. Maybe I've never dealt with them before, but you got an email back that they're no longer at the bank. Right? That's the simple thing, is just reaching out to people and connecting with them. Okay. VP of secondary marketing. Secondary marketing manager is a great one to do that. Let's do another one. Hold on. Let's do hold on trading. Hold on trading. Hold on trading. House Max funding for House Facts. Let's do that one more time. Hey, Chandler, have note. only have 300 characters in this, so that's a great thing. You got to be careful about, you don't want to get too long-winded. There we go. Send. That's one of the easiest things you guys can do any day of the week, anytime at all. On your phone, on your laptop. The only thing that's going to limit to you is that once you hit 20 or 30 invites sent per day, it may not let you do any more for the day. That's okay. You do it next day. I think it's limited to maybe 100 people a week. I'm sorry. That's 100 potential leads each week for you. Okay. So that's whole loan trading, special assets, secondary marketing, chief credit risk officer. This is going to be for your smaller banks. You're going to have a lot of folks at XC26,000. Works for credit union. Chief credit risk officer at Ally Financial. That would be a good one. At Macataw Bank, Farm Credit, Ozona Bank. Same thing. What do you have in your books that you're looking to get rid of? Got anything you're trying to get rid of? I'd love to talk with you. All right. It's as simple as doing that on a regular basis in reaching out to them and just touching that base. Okay. Does that make sense? Does that look intimidating? How many of you can do that? Everyone can. Doesn't mean you will. You've also got one thing you've also got to make sure we haven't talked about is make sure that your LinkedIn is up to date. Make sure it says something about real estate investing or aspect of it. You've got a full-time job. That's okay. Hey, Derek Elder, good to see you, buddy. Is that facet of posting or talking about having a professional, get rid of the glamour shot photo with you with a pink bow on it from 10 years ago. Put a current photo. Doesn't have to have a lot of stuff, but talk to, hey, I invest in distressed assets, or I'm an active real estate investor. Now, if you've got a job that looks at your LinkedIn portfolio, maybe you want to go block your boss, okay? Or you may need to just put in on your, as a subsetting, hey, I'm also a real estate investor, okay? Without getting tagged too much. Is that making sense, everybody? Pretty simple to do, just got to do it. And it's just repetition. Repetition, reaching out, following up, boom. And the same thing, you could call the corporate office at Ally Funding and say, hey, I need to speak to whoever we just talked to, Chandler, right? Is Chandler there? Hey, Chandler, Scott Carson here. I just shot you a LinkedIn connection request. Just want to follow up individually. You mentioned LinkedIn, or I just shot you an email. Guess what? They're going to like, oh, take a look for it. They're going to try to find you, or they're going to call you back out of respect. All right, let's go back here. All right, let's go into markets and pricing. I get excited about this stuff because it works. I can't tell you how many times that people reach out to me and how do you find deals? And I tell them that, and then they don't do it. And I'm like, ugh. And they go trying to do something else or something else or something else that's not providing value. Look, those are connections on LinkedIn that if you post on a regular basis, they're going to see your stuff a big chunk of the time. I'm like, oh, hey, this guy or gal knows what the hell they're talking about. I mean, you've probably seen, if you follow, you've probably seen some folks post, I buy notes, or I'm buying non-performing. Those are all students of mine that are getting stuff sent to them because they literally post on LinkedIn, I buy notes. And they're making regular connections with asset managers. It's one of those things that works. It's so simple, and it just takes a little bit of planning to do it on a regular basis or time blocking to find success. Okay, well, let's get into markets and pricing here, and then we'll take a little bit of a break here for you. Okay, so the markets and pricing, this is one of the things too, when it comes to market expectations. Note markets, and I talked about this briefly on, depending if it's a judicial or non-judicial state, if it's in Texas versus New York. They can vary based on a variety of things. The popularity, okay? Miami of Florida is a lot more popular than Miami of Ohio, right? If it's a real, Austin, Texas is much more desirable than, say, Italy, Texas, because it's a major market versus rural market, okay? Market values will vary. Obviously, you know, what I find funny is I've got a guy that has a friend of mine, Brian O'Neill. he posts a TikTok on a daily basis, sometimes multiple days on videos. And he's talking about doing a subject to deal, buying his property's 200,000, and all these trolls get on there. Well, 200,000, it's 1.9 in my area. I'm like, yeah, well, get outside of your market. For what? 1.9, what you buy one in your backyard in LA, you can buy 8 or 9 properties in Illinois or Ohio. What makes more sense? What costs, what leverage, you know what I mean? Keep that in mind. Foreclosure timeframes play a big number in pricing. If you're buying in a judicial state, but let's say they're foreclosing next month, that's almost done. I'd pay more for that than something that's just starting back off of foreclosure in a 12-month area. Okay, so each state's a little bit different. What I tell people to do, and I think I may have said this already, so forgive me if I'm repeating myself, is pick out 3 to 5 states and find out what's the foreclosure time frame for those states and figure out the biggest cities that have populations of 50,000 or greater. And those are your first round of deals. Okay. States I don't buy in a lot of times. I don't buy in Wisconsin, no offense. The property taxes just kill you. Okay. I don't buy in New York, New Jersey. I don't buy in Cook County, Illinois, because it's very corrupt there. It's hard to get anything done in a timely fashion. It's difficult. I don't buy in the West Coast, Washington State, Oregon, California. It's just stupid there. Plus, they're not very friendly. Eviction wise, you got investors leaving in droves. Okay. But I buy just about everywhere else. I'll buy stuff if the pricing point makes sense. I haven't bought a lot of stuff here in Austin just because it's been overpriced for years. That's caused me to buy a lot in Ohio and Michigan and Indiana. All right. I love those areas. I buy a lot in God's waiting room the last couple of years, but with the not taxes, but the insurance costs has really killed a lot of deals there in Florida. Okay. When you're starting off, you probably want to stay in higher populations of 25,000 or 50,000 and above, just because that means there's plenty of realtors, vendors, and buyers. If you're buying in a smaller market, like I'll give you an example. I grew up in South Texas, okay, down by Corpus Christi, Texas, a small town called Ingleside. Okay. My mom lives next door to Ingleside in Aransas Pass. There was 3,500 people when we first moved to Ingleside 30 years ago. There's like 10,000 people there now. Now, I would buy something in Ingleside. I know that area. I have friends there. I'm comfortable with that area. I know it. I wouldn't necessarily recommend somebody buying their first note there that's never been there. Okay. Now, if you got friends, family in an area, great. Like we got a coaching student, John Gore, who's doing tremendous. Him and his wife, Veronica, have already closed on their 5th note. They closed on 4 and they're buying a 5th one. And then we're going to 6th one. But right out of the bat, what was great is we were looking at a deal and there was one in his hometown. And it was a smaller North Carolina area. But I was like, well, if you got friends and family there, and you know this area, why not make an offer on there? I'm comfortable. You're comfortable. Great. But if you don't know the area, and definitely it's rural, avoid it. Okay. Just avoid the rural. If it's a property, especially been vacant in a rural area for a while, it's going to need some work, some rehab. It may have been vandalized. It's harder to get a realtor out there to put eyes on it. Harder to pull comps, that kind of stuff. So just stick to the easier areas, the bigger markets, bigger cities. If a city's got a major university, that's a good sign. Okay. Because worst case, if you have to foreclose and take the property back, you can always turn it into a rental. You know what I mean? In some cases, even though I don't like that so much, it's still an opportunity for you. Okay. And then also inventory. Like I don't see my stuff here in Austin or San Antonio, Texas, because we just don't see a lot of inventory here. So that's why I look at states that have stuff. That's why I mentioned if you live in Ohio, Indiana, and Michigan, you've got plenty of stuff that neck of woods. You may not need to invest anywhere else because there's plenty of stuff in your backyards. Okay. Now, what's hot right now? Obviously, the most expensive note markets are like California, still stupidly 90, 95 cents an offer non-performing. Doesn't mean I buy there. Arizona is hot besides just the weather. Although Arizona has cooled down a little bit because of a bunch of inventory, but it's still overpriced in the non-performing. There's still a gap between what note investors want to pay there versus what banks want to sell stuff for. Texas is still hot. It's stupidly hot here. It doesn't mean we haven't seen some stuff and bought some stuff. Like we bought something in Houston. We bought something in Dallas. We bought a couple down in Corpus Christi recently, some around San Antonio. You're seeing some stuff, but just make sure you know the values and what kind of condition it's in. We saw one in San Antonio recently that the price looked decent, but when we saw the neighborhood, it was a shithole. Okay. Nevada, I would stick primarily to Reno and the Las Vegas area markets. Still stuff's going hot there on the non-performing note side because those markets are still moving pretty well. Even with interest rates being up, there's still buyers in those areas. Georgia's a very hot market because it's 30 days to foreclose, second fastest in the country behind Texas, the Lone Star State. But it does have that one goofy thing. They want to be a mortgage broker or fund it with your self-directed IRA. So if you got a self-directed IRA, boom, you can buy there all day. All right, and of course, we mentioned this before, the West Coast. These are the states that are overpriced for the most part. They just don't make any sense in a lot of cases. You still see some stuff, but it's the most expensive stuff that you'll see. Now, I'll buy in Texas, Nevada, Georgia, and if I get a tape in or a spreadsheet, I'll look at those. Yes, but those aren't going to be my top 5 states for the most part. It's great if I can find something there. I'll get a cherry on top and go from there, okay? It's not so hot. The least favorite markets are New York, 3 years to foreclose, New Jersey, 2 years to foreclose. It does have a 6-month expedited foreclosure if it's vacant, so be careful there. But most of the time, you're not going to make any money modifying. It's going to be a foreclosure process in New Jersey. Kentucky is a weird rule where they want you to have a $500,000 bond if you're buying individually, or $1 million bond for a company. It just doesn't make any sense. Chicago and Cook County, very corrupt. I just avoid that area altogether. Lost too much money in notes in that neck of the woods because of it being corrupt and taking forever to foreclose. Assets under $30,000, especially in today's market, are probably not going to be worth it. Doesn't mean you, and that's $30,000 total fair market value. We've bought notes that had higher values, so they owed less than 30. Turned out to be pretty good, but most of the time, I'm not buying a lot of mobile homes on raw land or anything like that. It's usually too low. And then high equity note deals where there's a ton of equity, 100 grand or more above what's owed. I avoid those because the sellers are going to want 80 to 90% of that legal balance, and that doesn't leave a lot of money to make, a lot of room to make money on that $20,000. Some it does, others it doesn't. But I don't usually target those because I can get a better deal where they're underwater, where there's no equity or negative equity. Okay. The most inventory right now, I've talked about this before: Ohio, Michigan, Indiana, Illinois, Missouri, Florida, the Carolinas. You also see stuff in North and South Carolina quite a bit. There's pretty decent stuff I like. Those are the states that you see the most. And then also, of course, small balance commercial. Now, when it comes to commercial, we're not going to do a deep dive. It's a whole different ball game of evaluating a commercial property than it is a residential property. Most of you are going to start on the residential side, and as you get better, then you want to move into commercial. But you got to understand how to evaluate. Like a self-storage is different from a mixed use. It's different from a apartment complex. There's some different capabilities when it comes to that, and definite different characteristics on how you due diligence and operate those. We take those back. Okay. But this is where we're seeing the most amount of inventory for the most part. Okay. Pricing models. This is important to keep in mind. Okay. A non-performing note where there's negative equity, we do a stair-step model if they don't give us pricing expectations. Okay. If somebody comes back and says they want par on anything, it's not worth my time. Okay. Par means they want full payoff. I'm not going to pay full payoff. Just not worth my time. Negative equity where they're underwater, they owe more than the property's worth. We're going to do a stair-step model, and I got a slide here to show you what it looks like. Okay. Non-performing. Now, there's equity. They're probably going to want 80 to 95% of either the unpaid balance or the payoff. So if the unpaid principal balance is what UPB stands for, is only 100, but with back payments and legal fees, stuff like that, it's 125. Well, if the house is worth 150, they may want 90 cents to the dollar of 125, which means like $112,000 value. Well, that's not exciting because that only leaves me that $12,500 to foreclose and make any money on. Too expensive. I don't get the full 150. Remember, if I foreclose, I can only bid the 125. Now, if it doesn't sell the auction, I take the property back. Great, but there's no guarantee that it's not going to sell at the auction. So you got to be careful about that. Contract for deeds. You would see, especially on the non-performing side, 30 to 60% of lesser the UPB or the fair market value, depending on what's the less. Performing are going to be at 70, 80 cents on the dollar. Junior liens, like second mortgages, we just don't see. They're currently way overpriced. They just don't make sense. Don't call me up trying to buy second liens. You better go in somewhere else. Like I said, commercial is going to vary by cap rates in the asset classes. You got to know what's going on. You got to be almost like a Sherlock Holmes to figure out, what the heck you're going to do with that asset. If you've got to regentrify it or get what it's going to take to get it reperforming, or if you take it over, what kind of cash flow it's going to get for you. Okay. You're going to submit bids. When you submit to a bank, a lender, you're going to submit as a percentage of either UPB or the payoff. And it's not really anything fancy. Usually it's just an email with a spreadsheet with your bids on a spreadsheet. Pretty simple. But you're always going to take a look at what the taxes are. You can check taxes and know what's owed on a property or on a note before ever submit a bid. So you're going to make your offer and then subtract the taxes owed. Okay. When it comes to the stair step, here is the stair step model for you. Now, some people say this is out of date. People don't bid off. This is a guide. If nobody gives you pricing and it's underwater where they owe more, this is a rough price. So anything below between a $30,000 fair market value less, you're gonna rough 25,000 or 25% of that. So if it's 30K, that means 25% of that is 7,500 bucks. Okay. In the 30s, it's 35%. So if it's at 39.9 times multiply it times 0.35 minus taxes owed, that's roughly what you'd bid. Why is it a lower percentage? Because to replace a fridge or replace an AC unit, it's going to cost the same as to take a bigger chunk of that profit compared to like 100,000. So that's why you see the lower percentages. If it's in the 40s, 45%, 50s, 55%. If it's in the 60s and above, they probably going to, if you're buying one-off asset, they're probably want somewhere around 65% of the fair market value, give or take a little bit. If it's in a longer foreclosure state, you can drop it down 5 to 10%. If it's in a faster foreclosure state, you may need to bump it up 5 to 10%. Okay. If it's non-performing for a couple of years and no foreclosure has been started, then you want to drop it down. Now, here's the thing. The sellers are often going to throw a value from either a Zillow or a BPO value. You're going to bid off their value initially and look to determine if the value is different after they've accepted your offer. That would be ordering a BPO, a broker price opinion, or having a realtor drive by and pull comps for you. If the comps come back lesser, then you can fade or reduce your bid. And we'll talk more about that a little bit later. Okay. Here's the thing. I like occupied assets first and foremost. I do not like vacant assets unless I'm getting it at a price where I know I can foreclose and they're in relatively clean. I don't want big rehabs. I want something that's swept out or paint carpet for the most part. Okay. Occupied assets most of the time are going to be in better shape. Okay. Because there's somebody living in them. They're taking care of it. They're keeping the heat on. The air conditioner hasn't walked off. The AC is still there. You know what I mean? You've got more exit strategies that we'll cover in section number 10. A lot more exit strategies than a vacant asset. Okay. It's also easier to reinstate and modify, actually to do a deed in cash for keys. It's just easier to get a hold of the borrower when it's occupied. Okay. Plus, the emotional equity can work in your favor to keep the borrower in place and go from there. Also, it's less capital expenditures. If it's in good shape, you're not replacing something for the most part, because if you get the borrower back on track making payments, you don't have to do the work. They're responsible for the rehab or the upkeep. Okay. One of the biggest mistakes I made in my first 2 years as a note investor, I would buy non-performing and foreclose on everything. I should have modified or rehabbed them and I would have gotten a bigger bang for the buck. I had some deals that took 2 years to foreclose that if I would have reinstated or modified the bar on the front, I'd had a cash flow for that 2 years and not had to pay attorney fees and then foreclosure and then rehab costs. I could have had a performing note that I increased in value from 35 to 80 cents. Okay. One of the biggest mistakes I made. That doesn't mean I don't buy some vacant assets. There's a few places I will, like Texas and Florida. But I'm comfortable. I got a rehab going on in Indiana right now. That's dragging out a little bit, but those are pretty much the only places I'll take a look at, unless it's a major city and I've got somebody that I trust on the ground there. Okay. Questions about that? Does that make sense, everybody, so far? Kind of what we've covered? No, that will. Jim asked a question in Georgia. Can I put a licensed mortgage broker as member in the LLC and do notes through the LLC and be compliant? Nope, that will not work. I'm not an attorney. You would need to run it through their LLC, not your LLC, and then be a member. Okay. I believe it's got to be through their aspect, or do it through your IRA and it's fine. Okay. Good stuff. Great question, Jim. All right, guys, what we're going to do now is let's do this. We're going to take a midday break here for you because we're right about the halfway mark as far as time goes. So we're going to take a 27-minute break, come back at 12:30, And we'll be back. And then we'll do a new live stream on the YouTube if you're watching live on YouTube. Okay. We'll see you guys back here at halfway through the hour. It's a 27.5-minute break. I think we're having the eclipse take place right now. So if you get a chance, go out there. Don't blind your eyes. All right. So we'll be back in all right, everybody. Hey, we are back from our little lunch break. We're getting ready to rock and roll. On any questions that may have popped out beforehand while you were thinking about that during lunch, everybody's, like I said, there's no dumb questions, only the questions that don't get asked. So I see Judy's ready for more information. It's great. We are live streaming it back on YouTube again, too. So if you want to watch it there, you can. But thank you, Josh. Larry and Judy, ready to rock and roll. Awesome. Thanks. Guy's a legend. I appreciate that greatly. I maybe in my only mind, but I'm a big proponent of helping people succeed. I was very fortunate from 2004 to 2008 when we ran the mortgage company. I basically had a 4-year apprenticeship to learn creative investing the right way, to learn about note investing from Bob Leonetti and Jamie Kayla. I traveled the country doing mortgages for investors at all these real estate expos and seminars, the Ron LeGrand circuit across the country. Learned so much information. I always promised if I got to where I wanted to be ahead of the ball and do well, that I'd help people get there too. And so that's one thing that we're very proud of. But we do have the #1 investor recommended training for notes. The proof is in the pudding. In that we help make more successful note investors than anybody else out there. And I will say that proudly, no matter what you've paid or whose class you've taken, you're going to end up probably learning something from me that you haven't learned, and it's going to be beneficial to you. So we're glad to have you here. All join us here on Note Weekend, whether you're watching live or catching the replays. So Josh says, I've been in a couple of your courses that I bought. I have grown so much from your best money I've spent. I appreciate that, Josh. Thank you so much. Well, check out the WCN membership. Let's save you some money, buddy, and get rock and rolling for you. But anyway, let's dive into part 2 of Note Weekend. I'm going into the funding options because a lot of folks are distressed when it comes to raising capital. You know what I mean? By a show of hands, and it's okay to be honest, there's no shaming whatsoever. Who's intimidated by raising private capital, or who is yet to raise private capital from an investor it's not themselves or their immediate friends or family? Okay, friends and family is a great place to get started. Judy, thank you for sharing. Come on, folks. I know there's a few more folks that are a little determined. Gloria, I haven't raised capital. That's okay. Most of us start with our own funds, right? That's totally normal. But what happens is that most people, we use our own funds to invest, and then we run out of money, right? Or we only have so much money in our self-directed IRA. Thank you, Judy. That we use, and then we don't do anything more with it because we don't have any more money. Debbie, that's the hardest. Actually, Debbie, it is not the hardest. I'm going to disagree with you because it's actually the easiest. Part of it is a mindset thing. Now, Debbie, I'm not picking on. I'm glad you asked that because that's what most people think. Oh, it's the hardest to raise capital. Actually, what I'm going to share with you is going to show how easy it is to find private investors. Then it's up to you to talk with them. Because here's the thing, Debbie. Let's say you developed the cure for cancer. Let's say you found something magical, and it was the cure for cancer. Wouldn't you share that with folks that you had the cure for cancer? I know it's a stupid question, but I want to hear the answer. Yes or no? Of course, the answer is going to be what? Yes. I would share it with all. Of course you would. That's such a dumb question, Scott Carson. Are you an idiot? Well, I am sometimes. Okay. And if this idiot can raise capital, you can. All right. You have to realize right now. Okay. Let's think about this. Okay. Is it a bit of a chaotic time in the markets? Yes or no? The answer to that is yes, right? So much money is sitting on the sidelines making negative, making zero. Can we agree to that? People have money in a checking or something saying, oh yeah, they might be getting 5% in treasury bonds, but they've been getting what, 0 or 1% for decades, right? Well, you have a cure for a lot of folks out there. Now here's another thing. People that have a self-directed IRA, okay? How many of you had a self-directed IRA with funds in it? That money's been sitting there for a month, not doing anything. 6 months, 12 months, more than a year, right? Here's the thing you got to realize. We've done a lot of research on this. And 67% of people that have an IRA have 150 grand or more, okay, sitting in there. And when I've talked with Equity Trust and Quest Trust and Pensco Trust and IRA Services, roughly 30 to 40% of the money they have under management in their self-directed IRA accounts is making 0% and it's been sitting there not invested in anything. So let's pull some numbers like Quest IRA. I think they have about 2 million assets in accounts. If you take 40% of 2 million, that's $800 million making zero or really negative with inflation. That's cancer. Can we agree that's cancer? You have an opportunity to reach out to investors or people say, listen, I have an opportunity to give you a cure for what's ailing your investments. I've got a deal that I will pay you 6 to 8% or 10% annually, and you don't have to do anything. Would this be of interest to you? And the answer to that is what? Yes. And we'll go into more of that. But let's first go through some of the different ways to fund notes here for you. So how do you pay for a note? Well, you're not going to go down to the bank and take out a loan from Wells Fargo or Bank of America to buy a note. They just don't do that. It's got to be cash, got to be wire transfers. It's not, I mean, you're not going to show up with a bag of money to buy your note. You're going to wire money in, okay? If you have a personal or line of credit, you could use that to buy a note as long as that return is going to be desirable. I wouldn't do a revolving line of credit. I would turn it to a fixed rate so you know exactly what's going on. Only do it with money that you're it's an investment. I wouldn't do it on a line of equity with your house unless you've got a low interest rate on your line of credit. Use invest. I prefer, you might want to talk with our buddies at getfundable.com, Merrill Chandler. Anybody familiar with Merrill? He does a tremendous job in helping people get business lines of credit set up so they can use it to invest with. It's a phenomenal at what he does, okay? Lines of credit, personal and business both. So he's also got a boot camp called getfundablebootcamp.com. It's a required, I really believe it's a required 2-day course to learn everything about what he's doing. He also changes some stuff up, but it is mind-blowing. I learned a lot of stuff about credit myths and things like we thought were right were actually incorrect. And you need to know the truth about using your credit and developing credit and how to use it and not use it, because there's a lot of mistakes over 300 plus myths out there. You think one thing is actually the opposite, okay? But most of the time, you're going to use OPM, other people's money or your own money, okay? Jim says, yes, great course, Merrill Chandler. Yeah, phenomenal. Well worth the money, whatever he charges for it. You're going to use other people's money. And you can use it whether if they've got a self-directed checking, savings, whatever it is. You know, if they got a 401k, they would need to roll a chunk into it in an IRA. But a self-directed IRA, Roth or traditional, you can use solo 401k, SEP IRA, HSA, ESAs, okay, you know, all these things. We've had students use all these accounts to fund a deal, whether they're using their own account or partnering with other people and lending, borrowing that money from a flat rate return. Now, you can always go and watch the video we did on all different types of IRA types. I'm not going to get into that too much, but this is such an undertapped, underutilized space for investors. Because here's the thing. I get people that have been used to buying property with traditional loans or DSCR loans, or they're using, the FHA loans every couple of years to do that or first time, whatever. They don't understand that there's such a huge amount. They get capped out in 10 mortgages, then they stop buying stuff. Where you got fix and flippers that are only dealing with hard money lenders They don't know it. And all that work that they're doing to find deals, if they put a little bit of work into that, into marketing to IRA investors, you would have all the private capital. We have funded 95% of the notes that we have bought has all been with OPM. And I'd say probably 60% of that's come from self-directed IRA accounts. Okay. Now, if you don't have a self-directed Roth IRA or self-directed traditional IRA, go get you one. It's one of the most powerful wealth building strategies. We're not going to get into teaching you about IRAs today, but here are the contributions limits for the year. Something to think about. You can put up to $6,500 in traditional or a Roth, $7,750 in an HSA for a family. 401ks, you can put $22,500. You can put up to $66,000 in a SEP and $66,000 in a solo 401k. You can put a lot of jack away to the side in self-directed IRA accounts. But here's the thing. Most people, they put money away, but they don't think about investing it. They think it's there, they can't touch it because they're used to putting in mutual funds or stuff like that, whatever their 401k offers. No, you can use that money to buy notes, whether yourself or partner in another IRA. And here's the thing. You can also use collateral assignments. We see this happening quite a bit, where hard money lenders or will use the collateral of a note, a performing note, to get a loan to go buy more stuff. Hard money lenders are notoriously for doing this, where they'll make a loan for $150,000. They'll get a collateral assignment from a bank or a smaller bank to give them up to $75,000 or 50% of that under balance. As long as it's performing, they can go out and lend that money out, make points on it. Okay. In a collateral assignment, the funder holds the note file or other notes to provide collateral for it. A UCC1 is filed at the county for it. Other things we can do is when an investor funds a deal with us, we collateralize their, securitize their investment by either A, having them on the assignment a mortgage. Now, when a mortgage is bought and sold, it's not a deed that transfers, it's an assignment of mortgage that gets filed because the deed is still the same. So we'll say like 50% interest to Scott Carson LLC and 50% interest to Jim Shibley LLC. Okay, whatever it might be, or self-directed IRA equity trust for the benefit of Jim Shibley IRA is 50% interest. Okay, if we've got other real estate with equity, we can slap a lien on that other property as collateral for what they lend us. You can also sell partials from existing notes in a portfolio to pay for loans. It's a smaller amount. You can sell a series of payments, 12 months, 60 months, stuff like that. There's other ways to raise capital. Or you start a new LLC with an investor and have them actually fund into the LLC and they have ownership in the LLC through some shares. Or the investor just funds your LLC. Okay, variety of different ways to fund. Now, will a bank give me a note loan? No, banks will not lend on notes, but smaller banks may do collateral assignments. I've talked about hard money lenders. Some banks on the commercial side might be willing to joint venture with you, or they might be willing to lend you the money to buy that note, or they carry financing. Like if you're buying $1 million commercial note, they might be willing to lend you up to 75 to 80% of that note purchase price, provided that the value of the equity, the value of the asset is quite a bit more. We've done this multiple times in commercial stuff where a bank would give us up to 80%. Instead of being having to fund the whole thing, we only had to bring 20% of the table to buy the note, knowing we were going to foreclose or knowing that the borrower was willing to work with us to walk away from the property. Okay. You've got to have a management team that's some experience in that specific asset class a lot of times, which is pretty easy to find, but the bank may be willing to do that. But it's 20% down or 30% down is a whole lot better than having to pay 100% for the note. We can agree to that, right? Everybody? Happens quite a bit. Hard money lenders will not lend on notes. Now, you can often maybe buy a note. Hard money lenders make their money because they're doing short-term loans, 6 to 12 months. They're getting points. They like to control the asset. And then churn. If they can flip that money over every 6 to 12 months, they're making points on it. They don't want to necessarily be tied into a note for 3 to 5 years. Okay. They may have some notes for sale, but maybe at a 10, 12, 13% cash and cash return to you that might be worth buying par if they're short-term stuff and you can make 10 to 12% or greater on your money. Usually have a higher interest rate. If you have cheap funds, you got money, somebody wants to make 6% and you can buy a note at 12, you just made 6%. We have bought some non-performing notes from hard money lenders in the past where they were have to foreclose, and it was in a little longer foreclosure state, and they needed the actually funds were going. The hard money lender was going out of business, and so they had a portfolio they needed to cash in. So we've had success in that. When you're funding a deal, okay, besides the purchase price of the note, you're going to add some other things to it. If there's back taxes owed, you're going to add that to the amount. So let me give you an example. Let's say we're buying a $100,000 note. It's non-performing. We're going to buy it at 50%. So we're going to buy that note at 50,000. We're going to, and let's say there's $2,000 in back taxes. Okay. Well, we would maybe offer to buy it at 48, right? Because the back taxes are owed. So we take the taxes off. The seller's ready to sell it to us at 50. We're going to say, hey, we want it at 48 because back taxes are owed. Okay, great. But we're still going to figure that $2,000 into funding. Okay. Because if we can't get the borrower to pay it, we got to pay it. So we'll add in taxes. We're going to review values, either BPO and a qualified CMA. So you may want to add up to $500 for value. You always want to put eyes on the asset before closing. This is an important thing, just making sure it's decent and not torn down or not washed away or anything like that. You're going to budget in your foreclosure workout servicing costs. So giving you a bit of an idea, like we talked before, foreclosure can range from $1,000 to $3,500 in a non-judicial state, and a judicial probably from $2,500 to $10,000, depending on what state's in. So you can add that in. I budget $1,500 for servicing costs. Workout costs could be another $1,000 to $2,000. Here's the thing: if I can get a deed in lieu cash for keys, that's basically equal to foreclosure costs. So I'm not going to double dip the two. So if I'm figuring $5,000 to foreclose, then that's what my budget is for a deed in lieu cash for keys. So I'm not double dipping and adding more than my cost. Now, I'm not ever going to go above 65, 70% of the sales price of that note or whatever, whether the payoff is or the value of the property, the lesser of the two. I'm going to stay below 70%. Okay. You may need to add, if you got some room, you may want to add some cleanout costs, paint, carpet, that kind of stuff to it. If you're getting it low, and especially non-performing. Insurance is definitely a big thing, and it varies in Florida, where insurance costs, forced place insurance costs, have skyrocketed because of the hurricanes. Forced place insurance is if you're the lender, the borrower has to have insurance on the property. Well, if they don't have insurance, you need to go out and get it and put it on the property. It's called forced place insurance. Okay. If there's some code enforcement liens that don't get wiped out or utility fees, you may have to pay those. So this is why you're going to check title and pull a title report and title update to see all the liens that are on there and what's going to get wiped out or what doesn't get wiped out. Okay. I don't know what that means, Sean or Stephen. Okay. Like I said, I also add $500 to $1,000 in marketing costs along the way. That might include my BPOs and CMAs and O&E reports in that $1,000 because it's going to cost. It costs money for CRMs. It's going to cost you some marketing. All right. You might asset management. You might do a 3%. I've seen people try to do 6%, but 3% of the purchase price is an asset management fee, which includes some of the stuff. Okay. So, like I said, you're going to have more than just the funding amount of the note. You want to add a little bit extra there to cover. Now, if you don't use those funds, guess what? You're paying them back. But if you don't use them, when you sell the asset, guess what? That's extra. That's tax-free income. Okay. Like I say, stay below 65% of fair market value or the payoff, whichever is less when it comes to funding. That leaves there's plenty of room. If something goes wrong, it leaves nothing for you to foreclose or enough for to make sure and pay your investor back. Okay. Now there are 5 things when it comes to using other people's money that are protecting your investor. Okay. Think about this, especially those who are scared to have those conversations. I'm only buying first liens. I'm in the most secure position besides taxes. Okay. We're going to make sure taxes are paid and our taxes aren't going to wipe us out. So buying only first liens. I'm buying below 70% of as is value or payoff value or less, whatever's less. Okay. I'm using servicing companies and attorneys to collect and foreclose on. It's not me going out and collecting on things. I'm using professionals who have done thousands and thousands and thousands of these. It's a different thing than you buying your first rental where you're the one that's trying to be a property manager. No. We take all that your ignorance out of it. If you never service a loan, you're not going to want to talk to people. You don't need to be talking to borrowers anyway. You don't need to be handling foreclosure. Let the servicing company handle it and let your attorney deal with that. Okay. You put insurance on there, forced place insurance in case of an act of God. And then we're always checking title, collateral files, making sure We have the right to foreclose because we're really just buying this, ladies and gentlemen. This is what we're buying. This is what secures that 100,000, 200,000, that $1 million asset is the note, is the loan file. Okay. But those are the 5 things. Question here from somebody. I am involved in a group in Florida which suggests force-placed insurance as a cost savings. I surf. Well, here's the thing. If you're in Florida and the lender, or the bar doesn't have insurance, you need to put force-placed insurance on it to protect your investment from an act of God. If the bar has insurance on it and they're paying their insurance, you don't need to have force-placed insurance. Okay? I don't understand what the difference in that is, Stephen. Because if they've already got it, then you're just paying for extra insurance that you don't need to have. Okay. All right, so that's the thing. But here's the thing: finding investors. This is going to be more into kind of what we talked about the cure for cancer. Because here's the thing, ladies. If you think back to that, those are 5 things we're doing to protect. Only buying first liens, buying at 70% or less, using professionals who have thousands of years of experience of doing it, not just me. Making sure we're checking title and collateral files, make sure they're right to foreclose, and then also putting force-placed insurance on the asset in case of an act of God. In case God decides to throw down in Florida or Texas, we're going to make sure there's insurance on that makes sure that we get paid back, you get paid back, and all is good. Okay? Let's move on to finding investors, because this is right here what's going to probably rock your world. All right, got a question here. Jim asks, ever give investor lenders insurance? Well, that's the force-placed insurance. You're named, Jim. Your LLC is named as the bank, as the payee on the thing. So there's no reason to give your investors lenders insurance. If they're on the assignment of mortgage for the property, you're covered. You're covering the replacement or the percentage on there to make sure that they're paid in full. Okay. So, or you may do repair costs, replacement costs. So if it's worth 100, you have the property insured for 100. You may have only borrowed 70, right? So you pay your investor back to 70, and you keep the 30 for the replacement stuff. You get what I'm saying now? You got to realize, ladies and gentlemen, when you're buying notes, you're the bank. Think like a bank, not a fix and flipper. Okay. Of course, if you're fix and flipping, you're going to put insurance on a property anyway, right? But insurance companies may not want to insure your vacant REO, right? So force-placed insurance, I love it because if I can't get into that property beforehand I can often file a complaint, file a claim. Oh, hey, I bought a property, looked good, and we went in, and loan holders will file a claim, or water damage will file a claim. That kind of stuff. It's great. Okay. Moving on here. All right. Session 7, finding investors. This is the beautiful thing I think that nobody teaches. We've been teaching this for a while as a way to really help you guys understand that you can find investors all day long if you know where to look. And what's great about the way we teach it is it's a much friendlier, warmer method. Okay. Yes, you can go to your local real estate investment clubs and meet at groups and network with people there. That's great. There's nothing wrong with that. Okay. Unfortunately, most investors at real estate investment clubs want to make a 12% or greater return, right? They're sharks just like you. Joanna says, any inspection required before the insurance company can insure the property. So here's the thing, Joanna, you're not going to get interior inspection reports. You don't get to go into the property when you're buying the note. So no, they may drive by it and take a look at the extra part of that, but no, it's force-placed insurance. And no, they understand you're buying the note. You're not going to be able to see inside of it. So it's not that big a deal. Okay. Now, of course, if there's a big gaping hole in the roof and they see that, they're not going to insure, but you get what I'm saying. All right. You can find investors on LinkedIn by going and typing in real estate investors or note investors. Okay. Keywords, LinkedIn groups, you look at profiles, all sorts of way to find folks on there. Okay. You can go to Connected Investor. You can go to Bigger Pockets, look for investors on there. Keywords. I like using the Bigger Pockets keywords to find people. 50K to invest, 75K invest, 100K to invest. People will literally go on Bigger Pockets and say, I got 100K to invest. What should I do? Well, guess what? When somebody posts there, if you got a keyword, it'll alert you that somebody said that. go send them go send them an invite request, and I send them a pitch deck video, 10, 15 minutes. Hey guy, I saw that you posted about this. Here's what I invest in. I thought you might be interested too. We've had students that have raised millions and millions of dollars by doing that one simple thing on Bigger Pockets and Connected Investors. Simple, rinse and repeat, and it's like shooting fish in the barrel. Self-directed IRA events like Quest Expo. Equity Trust used to have a big conference every year. Don't know if they do. New View IRA has a big thing down in South Florida. Okay. What I love doing more so than anything else, though, is I want to find people that have used their IRA to pull the trigger. And by pulling the trigger, I don't mean going out to the firing. I mean, pulled the trigger and either bought a piece of property with their IRA or they've lent money out of their IRA on real estate. Because think about this. You don't have to teach them about investing. You don't have to teach them everything you need to know. Most people that have a self-directed IRA are more educated about investing than others, right? Those that pull the trigger have money to invest, and guess what? They're looking for more deals. They're not going to kick the tires and light the fires without pulling the trigger. So it becomes a much easier conversation for you to say, hey, I saw that you bought your IRA, use your IRA to buy an investment property. Are you looking for more deals? I've got some deals and I would love to talk with you about it. Okay. So we go to Natural Online, and I'll walk you through this. It's so valuable. Okay. I get realize, ladies, we spend a full day on raising capital on our 3-day course. Day 2 is about marketing and how to raise capital, how to find investors. But Natural Online, that will take you basically to every county website out there. It shows you a map. You go to official public records, boom, you pick the county, and then you pick the department, okay? Doesn't cost you anything. It's free. Save it. Naturalonline.com. Check taxes, all that stuff, okay? Now, we go to the county appraisal districts and the county clerk or the recorder's offices, all right? And there's 2 different searches to find people that have used their IRA to either buy a piece of property or lend money out of it, okay? And it's literally will give you a list of investors that you can either download or scrub, and then you reach out to them, okay? And all you got to do, you don't know the investor's name, you just do a search for the IRA custodians, okay? So in the appraisal districts, okay? You go there, and there's a bunch like 50 different IRA companies, Equity Trust, Pensco, Quest, IRA, there's so many of them. There's more than 50 now, but 50 plus. So all you got to do is the appraisal districts and type in where it says property owner, you type in self-directed IRA company, Equity Trust, Quest Trust, etc. Okay, it will give you a list of everybody who owns a piece of property in their IRA in seconds. It will give you the mailing address. If you click on them individually, it gives you the property address, but also gives you the mailing address. And then all we do, if it doesn't give us the name, if it says like Equity Trust for the benefit of IRA 1, 2, 3, 4, 5, 6, 7, okay, we don't have a name, but the mailing address is not the main office of Equity Trust. We know we have a mailing address for the investor. So we can do a skip trace. We can do a reverse lookup at that address to see who the owner of that property is and see if they own any other properties. But will give us enough information to drop a letter or a postcard out to these investors. And it's a simple letter. Like I just said, hey, Jim, I saw that you used your IRA to buy this property in Lucas County, Ohio. Are you looking for more deals? I would love to talk with you. Who on here is not looking for more deals? Raise your hand. Everybody. I know it's a stupid question, but everybody's looking for more deals. Otherwise, you wouldn't be here, okay? Now, like I said, the average IRA investor has 150 grand or more sitting in it. 67% of IRA investors have 150 grand or more. You're literally like 60 days from raising $1 million in capital if you use this. Go to White Pages or Google.com to find that person's name. Go to LinkedIn and find them and send them a message on there or Facebook. We find people all the time. We skip trace them and drop them an email. Then we mail a letter or postcard. I literally have a box of the postcards right here. Hang on. So we literally have postcards, you know. Is your piggy on track for on track for retirement? Okay. Literally, is your piggy on track to retirement? Okay. Postcard backside's pretty much blanks it for my information. We do a mail merge to a sticky, mailing envelope, a little bit of word. Hey, I saw that you use your IRA to fund a deal. Are you looking for more deals? Love to talk. And then they put a little capture code where they scan it and go there. Yeah, fastpeoplesearch.com works pretty well to skip trace for free. Yeah, that's good. But here's the thing. Most of the time, these counties are going to give you their mailing address or give you the property address. And even some counties, it literally allows you to download them with the mailing addresses in a spreadsheet. I mean, you go to Lucas County, Ohio, Hamilton County, and do that, and then literally download like 700 IRA investors in less than 5 minutes. Okay, it's stupidly. And here's the thing: do you have the cure for the investments? Yes. If you've got deals that are going to pay 12% or more, and they're looking for 6% or 8% or more, you can carve yourself out enough capital to make a good return. You just got to do the work. Now, that's the county appraisal districts. I'll walk you through that in a second here, okay? Now, if you go to the recorder's office or the county clerk where deeds are filed, you do the same search. You do look up a property type will be a deed, okay? Do a deed search, same thing, type in equity trust, Pensco trust, Quest IRA. It'll give you a list of them off in the mail address. Now, you got to look at the deeds on this. This isn't going to give you a nice, clean download list, but it's well worth it because it'll show you, oh, yes, so-and-so made money, lent 60 grand to LLC for this such property with a mailing address of this. It tells you the investor borrower, the amount lent, the IRA investor, and literally same thing. You pull a list, mail a letter or postcard out to them. We go through this. We give you our exact step-by-step, our sample letters and stuff that we send out. We do that in our 3-day course, okay? Very, very worthwhile, and it's rinse and repeat. You don't need to have thousands of investors. We have students like Larry Hoffman, who's one of our coaching students out of Cincinnati. He's probably pulled a list of 200 to 300 IRA investors, and he's raised a couple $1 million from just doing that postcard letter. Sends with a link to his website about, he's got a 10-minute pitch deck video we helped him put together. He's raised a couple $1 million. This is like shooting a fish in the barrel, okay? IRA investors are smart. You don't have to teach them everything. They understand investing. It's passive. They can't be actively going out and working the asset either, so it works great for notes. Okay, 40% of IRA money sitting in IRA custodians is making zero, so they're not doing anything. So you literally have the opportunity to help somebody, give them the cure for cancer. You just got to talk to them. Now you can buy custom lists. You can buy purchase lists of just people that have an IRA. You don't know if it's self-directed or what they have. With exact data, you can actually order a list of people that have 150K or more by city, county, state. You can buy purchase list of employees with companies, stuff like that. Name, address, email, phone, Melissa data or exact data. The thing is with this, you don't know say what type of IRA, whether it's they've done any real estate. This is a little bit harder, but it's 6 to 14 cents per lead. So you usually got to buy about $1,000 worth of data, and it's about 16,000 names. It's gonna be hard for you to get that out. So the best thing to do is just to use the county, pull the list. If it allows for you to search in the county by name. Now, not every county or state will allow you to do that. If you're in Virginia, Maryland, you can't search by owner's name. If you're in California, Arizona, maybe Nevada, it won't let you search by owner's name too. But that's okay. Just go to a county, another state, and pull a list. Everybody's investing. Everybody's looking for stuff. Okay. Just got to reach out to folks. And this is, well, it may cost you a bit of money. You don't need it. If you figure that you want to raise $1 million in private capital, you really need 10 investors to fund with you. Because out of 10, 6 or 7 of them will have $150,000 or greater. Okay. And the others will have less than that. So you get $1 million, $1.5 million in private capital in the next 90 days. Okay. Now you can also go to social media and post, which is okay, but you're going to get a lot of freaking trolls on there. If you're going to post on social media, past deals, fix and flips, rehab stuff that you've done, hey, we're always looking for funding partners. Case studies from other investors are good. Deals that you're working on do really well. Never mention safe or guaranteed in your marketing. I think it's valuable to create a short 10 to 15 minute pitch deck video talking about who you are, what you're focused on, some of the sample deals that you're doing. And, talk about your vendors, your team, your experience. This works really, really well to raise capital because it makes you look, and most people don't have a pitch deck video. Okay. How many of you on here have some sort of pitch deck video? Probably don't, right? If you do, you're probably one of my students, okay? But this adds a lot of stuff to it. We did a whole Note Night in America just on building the perfect pitch deck, okay? Debbie does great, awesome. How long is your pitch deck? How long is it your video, Debbie? Three minutes. You might want to make it a little bit longer than that, but that's good. It's good to have something versus nothing. Okay. Now, with investors, you got to qualify them. Not everybody is going to be your cup of tea. Are they currently investing in real estate? Part of the reason we like to target self-directed IRA investors, we know they're currently investing. Okay. Are they accredited or sophisticated? I'm not going to take 25 grand for somebody who's last 25 grand. That's a bad thing. Okay. How much are they looking to invest? These are questions I'm going to ask. We did a Note Night in America on 20 questions you want to ask prospective high net worth individuals, okay? How long are they looking to invest? When people think about note investing, they say mortgages, they automatically think 30 years. We always say, no, it's short term, 24 to 36 months or 3 to 5 years, depending on the situation. Are they active or passive? If somebody's a very active investor, like Jim Shibley's on here, he's a pretty active guy. He's probably not going to get out of bed for 6 to 8%, right? But if somebody who hasn't done anything and not active, they would be happy probably getting 8% because they haven't gotten anything in the last 2 years. Okay. What kind of returns are they looking for? What have they invested in? It's the same thing. What have you done? If somebody says, oh, I flipped the property 5 years ago and made 25%, that's great. But if you haven't done anything, that means your money's making you 5%. You haven't done anything. So if I could show you 6% passively for the next 5 years and you don't have to do anything, would you be interested? Yes or no? Okay. And we use an investor questionnaire. It's about 20 questions going through, what do you do? What have you done? What classes have you taken? Where's the money coming from? That kind of stuff to help qualify. And there's some red flags on that too. Now, there are investors you want to avoid. People that are unfamiliar to investing. They're never going to pull the trigger because they just don't get it, okay? People wanting like a high ROI in a short-term period of time. I had a guy reach out to me, I got $500,000, but I want 20% in 6 months. I'm like, well, then go do it yourself. What? You don't want my money? It's like, no, it's too expensive. I got cheaper money out there. Okay. I prefer to start off with folks at $50,000 or greater, a little less issues. I get it when you're starting off with friends and families and stuff like that. You're probably going to have less 20, a few folks at 25 to get a deal done. I get it. But really get to that point where you're asking for 50 to 100 or more. Be more sophisticated, more educated investors that are going to cause less problems for you. Also, take a look at how people talk about people. If you see somebody who's bad-mouthing other people or they're negative Nancy's online or all those trolls or those Karens, avoid them. Worst thing I ever did was allowing a couple of folks that came in and had a negative attitude, and it made my life a living hell for a while. And if somebody's suing, one of the questions I ask, are you involved in a lawsuit or to sue anybody? Can you tell us about it? And it doesn't mean, if you're an investor, at some point you're going to get sued, okay? But if somebody's suit happy on a little thing, if you promise somebody a 12%, you give them 11.9, they're probably going to sue your ass for not delivering, okay? And I always like to ask for references or past partners, CPAs, attorneys, bankers, who you're dealing with. I want to ask for references just as much. It's a two-way interview. Are you worthy of my investment? Are you worthy of my opportunity? Because there's folks that aren't worthy that you don't want to waste your time with, okay? Sometimes saying no is saying yes to being able to sleep at night and not deal with PETAs, pain in the asses, okay? Always require investors to do this. When you're talking to somebody and they're interested in wanting to go that next step with you, have them fill out the investor questionnaire profile that you use. Now, you're going to fill out a big chunk of it asking questions, but send it back to them to fill out the rest and send it back to you. You also want to have them send you a pledge letter or an email like, hey, Scott, I'm sending my email here. I want to pledge $50,000 for you the next 2 years to do notes with you. I'm attaching my proof of funds, my 401k, my IRA statement, whatever it is, my bank account statement showing that I've got the money and I'm willing to do that. The reason you ask for these three things, not only are they yeses, but it's in case they flake on you and you got to go to your note seller and go to and you need time to get a backup investor. Okay. So, hey, Jim, I'm sorry. My guy just walked on me, but here's his proof of funds and pledge letter. So you know that he proofed up. Give me 72 hours to get with my backup investor. Okay. If an investor will not send you these three things, they're not going to fund. No matter how much you've worked with them or how much you've known them, they're not going to fund. And the big thing too is you want to know where that money's coming from. If it's coming from an IRA, who is it with? Because if it's like with a Schwab or an AG Edwards or Chase, then they need to move that money into a self-directed account and open it with a true self-directed trustee that does notes and real estate, or that will allow them to do that. That can take about a week to do that and move the funds. Okay, they're going to take, if it's in a stock account or something like that, mutual funds, it's going to take 3 days to trade out of that before it's able to be wired into the new account. So realize it's going to take at least a week. If they're doing a rollover, it can take 6 to 8 weeks. Okay, something to keep in mind there. All right. All right, let's keep moving here. And this is very important to you. Have paperwork created by your attorney. You're going to use a funding agreement for flat investments. If they're going to invest in your LLC, then you're going to create a articles of operation, or your operating agreement. Sorry. And I'm okay having a CPA or attorney review what we have going on. All right, as long as they got real estate experience. If they review it and say, well, I can't recommend it. Of course, they can't recommend it or deny it. They just don't have any experience. But if you want to look at the documents and see how it works, it's fine. Always use agreements. I had one guy who borrowed 50 grand from his uncle. And he never wrote anything down. And his uncle got mad and sued him for stealing money. And he didn't steal money. It's just the deal took longer. Okay. I'm like, listen, this is why you need to put, oh, it's my uncle. He'll never do it. I was like, you need to make sure. And sure enough, it led to strife. So a lot of times it's best not to invest with friends and family. Okay. Most investors can't make 6% or greater on their own in the market. So don't give them more than what they deserve. Okay. If money's been making them 0% and they pull the trigger, give them 6%. 6% is an above average return for them. Okay. As far as payments go, when you're getting in, if you're buying non-performing, we don't we only do quarterly payments. Okay. To our investors. And we only do quarterly payments if the note is paying. Okay. We don't do monthly. We do it quarterly or once a year. If it's an IRA, self-directed IRA, they can't tap into the money anyway on a monthly basis or quarterly basis, so it doesn't really matter. You can set up an online portal. Most of the servicing companies will give you investor access, so they can log in. They can't make any changes, but they can view only. Okay. We use Basecamp. You can also use Slack, a CRM tool, Dropbox, Google Sheets. Just share with your investors some way for them to see, and never, ever, ever pool money. Investors' money together. One investor per asset. So like if you're buying a note at 50 grand, don't use 10 grand from your sister, 25 grand from your brother, and then another 25 grand from some third investor. That's pulling money that's illegal. That'll get you in trouble. Okay. Now, if you're buying 4 notes, you can have one investor fund one note, another investor fund the second note, a third investor fund the third and fourth, but they're unique only to those individual assets. Okay. Trust your instincts. If you get a good feeling, great. If you get a bad feeling about somebody, trust it. It's best just to move on. Say, hey, I just got a feeling. I think we better just be moving on as friends versus doing business together. Okay. Here's the thing too. Let me go on here and share with you some stuff. Is this making sense so far, everybody? Kind of what we're talking about. Let me show you how easy it is to find some of this stuff. All right. So like if we go here, this is Netra Online. Yeah, Jim. So buying notes, most notes will be under 200. Well, that depends. I bought plenty of notes that were $500,000 or greater, depending on where you're buying at. So that answer is more going to be if you're targeting what state. So like you're buying a lot in Ohio, Michigan, it's going to be well below 200. If you're buying in Florida, you're probably going to be buying 250 on the lowest side. Okay. If you're buying commercial, it's definitely going to be above 200. Okay. So keep that in mind. So we're here at Netra Online. So I'm going to go click on Public Records Online, or this yellow button here. And it's going to pull up a state here. And so I'm going to pick a state. Let's just go to Ohio. I talked about them earlier. Ohio is the home of Equity Trust. And Equity Trust is the largest self-directed IRA company in the nation. Okay. So we'll just go over here and show you literally so stupidly fast. So if we go to Lucas County, and that pulled up all the departments there for the county. So Lucas County, let's go to the auditor. Just click there. Can I get a thumbs up from folks that are watching live on the YouTube? I see you folks out there. Give me a thumbs up or let me know what part of the country you're watching from. Give it a second here. South Carolina, Cal. Yeah, if you guys are on Zoom, you're okay. I was talking about the folks watching on YouTube. All right, come on, Lucas County. Give it a second here. Oh, come on now. Let's do this again. Lucas Auditor, go to Data Online. Hopefully the county's not got the website up for maintenance this weekend. There we go. Looks like it's working now. Oh my goodness, it must be not working. Okay, so we'll go Hamilton County. Let's just pick another county. And the auditor, click on that. What is going on? What is wrong with these? That doesn't make any sense. Oh, that was Lucas County. Okay, so here we go. Okay, Hamilton County. All right. So you see here, this is searching for property owners, right? I want to look for owner. So I'm just going to type in equity trust. And hit search. And we just found 192 results of people in the Cincinnati area, I think that's Hamilton County, who have used their IRA to buy a piece of property. Okay, it's 192. I can hit export results of the CSV just like that button there. Okay. Now you can see on here, this is how it makes out. You can see this is the address of the property, the transfer date, the sales price will be due. If we click on one of these, you can see equity trust, owner name, and the property address, 1623 Dalton Avenue, number 14 in Cincinnati, Ohio. And the mailing address, you see the tax bill and mailing address is the same as that property. So it's not Equity Trust's main address, which is good. So I could just mail postcard a letter to this address. So Judy asked a question, did you just know to type in Equity Trust or you know they were in Ohio? I knew both because I've researched it. But if you go out and type self-directed IRA custodians, let's just do this. List of self-directed IRA custodians. What part of the country you live in, Judy? You're in Maine. Yeah, you're up there. You're not going to know. Probably, well, I don't know. You probably would. Just got to search. You just got to do a little research, girl. All right, there you go. Come down here. Look at this ultimate list of something. This is a couple years old, but literally, boom, boom, boom. If you're a real estate investor, you'll end up knowing Equity Trust, Quest Trust, okay? There's all the IRA companies out there. So we go back here and see that, but let me go back and show you. Let me pull up the download file. So I hire a VA to go through in major counties and do this list. Well, I had my VA pull the list for the top 25 counties in Texas. I mean, it came to over 2,500 unique IRA investors with their contact information. Okay. Now, when you download this list, it's not going to be as easy as pie, but you know they're all in like Cincinnati, Ohio, and stuff like that. But if you go, let me share the spreadsheet here for you, so you can see this is what downloaded. Equity Trust, address, the transfer date. I don't really care about the address here, which is totally fine. I can just put in Cincinnati, Ohio, because it's all in Hamilton County, right? So like here, see John Martindale, IRA. Well, what could I do to find John Martindale? John H. Martindale. Let's go over to LinkedIn. And we're looking for somebody in, let's do in Ohio, right? Steve Martindale, that's not the same thing. Okay, John, let's try John H. Martindale. Maybe he's not. If he doesn't have a LinkedIn profile, okay, no results there. That's okay. But let's do this. Let's try one other thing. Copy. So maybe he's not in there. Well, in Ohio, including phone number, maybe that's him. Who knows? But you got the address. All you got to worry about is dropping a letter out to this list, right? To his name. So we go back here. Let's pull up John right there. Look at this one here. And yeah, John H. Martindale IRA, and he's at 229 South 20. Oh, I should have looked this beforehand. Okay. So he's in Richmond, Indiana, and he owns this building here. So you get what I'm saying, ladies and gentlemen. You're literally, that's 192 investors in this one county. That's just one search. Let's go back and do another search. Start a new search. Okay, that's great. You can look at them and find all the people you want. I'm not worried about it. Okay. Let's see if Quest Trust has anything in there. Probably some, maybe not. Who knows? Quest Trust has got only 4. Let's try, which is great. Still, there's 4 more people. Let's see if we can see Quest IRA. Okay, look at that. That's 9. So we just found over 200 people in the last 10 minutes. Amy Dressman, Anna Lawson. Anna Lawson's on there twice. She's got 2 deals. That would be worth reaching out to. That's the same property. Roger Wellis. Do you get what I'm saying, ladies and gentlemen? These are investors who speak your language that are looking to fund deals with their IRA. Would you feel comfortable reaching out to them now and talking to them? Debbie, how about you? Oh yeah, I love that. Because you see, if you take all the unknowing out of it and you target these, this is like literally shooting fish in a barrel to find investors. We know they're investors. We know they're like-minded like you. Why would you not? If anything, it's just worth a phone call, or if you can find their phone number, call them, drop them a postcard. It's a great research method, but literally you can raise millions of dollars doing this. Okay. Literally, you can raise millions of dollars doing this and never have to borrow another dime again if you just did this once or twice and stuck with it. Okay. Good stuff. That's just on the appraisal district. Let's do one more search here on the recorder's office. And so you can see that too. Recorder's office is going to be a little bit more difficult. Well, Judy, it varies. If I'm buying a lot of assets, so I have a pretty good database, and it just ebbs and flows. I've got about 800 plus IRA investors I can send a text message out to and get funding usually pretty fast. It just depends on what the deal is and how many people have on it. Okay, so Francis, a question. I missed a step. Where did you go in the search engine for lists? You type in lists of self-directed IRA custodians. You just Google that, Francis. That's it. And then you look at the ultimate list of IRA, self-directed IRA. Just look at it. Just Google it. All right. Your agreements to do stuff, you're going to find those in our 3-day course. We're not going to give that to you guys. You got to go through our 3-day course with funding agreements and stuff like that. We include that in our 3-day course. Not going to give that out here. Okay. You're dangerous now. You got to learn it a little bit better. Okay. All right. Let's go back here to the recorder to do a deed search to see who's lent money out of their IRA, okay? So we're going to do corporation name, same thing. We're going to click on here and just type in equity trust. And you can see I've used it before. And we're going to, if we just did the search here and just show the name of equity trust, it pulled up 36 names, equity trust with all these individual names, but then also, so if you look at here, 3, 5, 9, 45, 92, 358, 360, 600, and a bunch of individual ones, okay? So about 600 different names who have used their IRA account since it started. So let's go back and narrow it down a little bit. So let's just do it for the last 5 years. 01-01- that would make it 2018 to let's do 10-01-2023. It'll let us go that far back. Hit search. We're going to type in a deed. Okay. Deed search and hit search. And it gave us a total of 1, 2, 29, 31, 33, 197, 213, 215 names. So let's just click on one of these. View selected. And we'll just click on it. So you can look at the actual document, view image. So here we go. This is the copy of the warranty deed. And you can see here, let me blow this up a little bit. Let me drag it out some, yeah. Equity Trust Company for the benefit of Isaac Freeborn LLC, hereby sum of $10 and a good and valuable consideration. Basically, general warranty even to Juanzena Jackson. So basically, Isaac Freeborn out of his IRA account lent money to Jarena Jackson. And let's see, tax mailing address. There you go. 7511 Griffin Drive, Cincinnati, Ohio. Yeah, perfect. And there you go. So Catlin Fisher works for Equity Trust, but we're going to look for Isaac Freeborn roughly in Hamilton, Ohio. Okay. That makes sense. Yeah, the 3-day course is HTTP. Nope, buyingfordummies.com. Okay. Judy, I'm very dangerous. We're all dangerous. That's right. Danger is my middle name. So this, doing the deed search to see who's lent money, is going to take a little bit more work, right? It's not going to download a whole list for you. I mean, it's going to give you some ideas, but if we go back here to this, could you copy and paste this down? Yeah, you can copy and paste this down, but you don't have any addresses on here. So you'd have to send your VA or assistant to go do it individually, but it's still worth it. It's still such a beautiful thing. You could also do a, let's go back here and do one search real fast, do a release. And do a deed search. Instead of a deed search, let's do a release of lien. A release. That's maybe folks who have lent money out, but they've gotten their money back. And you found 8 results of those that have had a release. So those would be good to start off with, because they've lent money and they got their money back in the last 5 years. So like Daniel Dieters, Sherry, Samantha Lamar, Daniel Rotten, and Sherry L, or Daniel and Sherry Rotten, okay? Ryan Hutchinson did it twice there. So that would be one I would look at immediately, okay? Because he just got his money back in June of this year on 2 deals. Okay? Yeah, the note doctor. Hello, doctor. Yes, it's being recorded. That's why it's on YouTube, buddy. But you get ladies and gentlemen, see that just like that, you found a bunch of people that you could reach out to. This is simple. It's the hardest thing. How do you find investors? I just showed you how to find them all. Is this making sense, everybody? Yes, thumbs up, loving this. Well, we share with you the postcards, the scripts, the letters we send out, the marketing pieces, sample pitch deck, all that goes through our 3-day course for you. Okay. All right. It's a lot for the first time. Yeah, but great info. Yes, Judy Richards, I totally agree. I just hit you with a fire hydrant. You didn't expect that on a 1-day free course, did you? There you go. Well, I like to over deliver. I like to under promise and over deliver. Okay. All right. So I think we're all good on the finding this notes. I show you how to find them, and then how to contact. You all know how to skip trace, how to reach out. That's the big thing. Like I said, if you want to know, have the step-by-step how we contact them and what we say, what we don't say, then you want to sign up for the Note Buying for Dummies workshop at notebuyingfordummies.com. All right. So let's move on to the next section, and we'll go from there. All right, section 8 is all about note marketing. Here's the thing. If you haven't figured this out already, that finding notes or finding deals is about marketing. And most people think marketing is direct mail, yellow letters, bandit signs. That's one form of fashion, but that's like from the dark ages. Okay. Marketing for deals and marketing for money are two things we're always going to be doing, right? And I like to work smarter, not harder. I like to leverage the power of things out there. And for some of you, social media and other marketing may be intimidating because you've never done it before. But don't you want to work smarter and kind of set some stuff up on autopilot that you can reach the masses versus spending thousands of dollars to get a 1% response rate? I mean, it's a no-brainer when it comes to things. So let me share with you how we market, okay? We're the best at what we do. Like I said before, 80% of the sales made after the 5th contact. We've had multiple of your gurus come to me for marketing advice and counsel. They wanted to hire me. I'm like, you can't afford me. But when it comes to marketing, when I say expect to post regularly and often, that's why we want to hit that 5th contact with people. How many of you have been maybe watching me or been on my email list for 6 months before you did anything? How many of you have watched videos or listened to the Note Closer Show podcast for months, multiple times before you decide, I'm going to take Scott's class? Probably a lot of you. Or how many of you come to my website, check to my website and listen to something, but then you're not serious about it? That's totally fine. We've all got different timing. And that's what I'm trying to get at is if you think about like what goes into the marketing online, you have during football and all that stuff, you've got mass marketing for what? Fast food, pizza, burgers, heartburn medication. Think about that. It's posted on a regular basis. Oh, you heard me on Brian O'Neill's podcast. Like, Brian's great. Yeah, Brian's a great guy. We're going to be able to do a lot more together because we have similar mindsets. So you got to expect to post regularly and often on a regular basis. Now, you don't have to do so much content. You can literally create one piece of content and reshare it across multiple places. And we automate our online posting. You can do buffer.com. I like Buffer. Hootsuite also costs more, but buffer.com is one of the easy. Debbie, we met at Noteworthy years ago. You're exactly right. It's been years since I attended Noteworthy. Last one we attended was the one we did with Jack in New Jersey back. But yeah, automate with buffer.com makes it easy because Buffer will allow you to post. Not only you go on to buffer.com, you write a post, you can post that same thing to LinkedIn, to Facebook, to Instagram, to Twitter if you're using Twitter, whatever you want to do. It's so easy to use. And there's the most important things that you're going to use in today's market. You got to remember this when you're marketing. Okay. And some of you are going to like this, and others are you going to bitch and moan about this, and you're either going to do it or you're going to get left in the dark ages. And if you're going to do that, do yourself a favor, log off and go enjoy the eclipse, because you're about to get eclipsed by the 21st century. Okay? Email is one of the most important things. It's still the most valuable piece of marketing that you can do in emailing out asset managers, emailing out your investors. Okay? You get a 44% 100 return on your every dollar spent. So like for every dollar you spent in email, you should get 44 back. Who doesn't want that, right? I'm not saying email every day, but you're going to email your investors once a week. You're going to email asset managers once every 2 weeks. It's one of those steady things you have to do. You got to touch base with them. All right. What do you market to your database on a warm week? Well, you got a holiday every month, so you wish everybody a happy holiday. You can talk about an event you go to or event you attended, maybe your local meetup group, and then you talk about a past case study or a past deal you done, and then a current deal you're working on. That's your weekly email. Hey, here's what I'm working on. Here's what I closed last week, okay? LinkedIn is very easy to automate with BART outreach to different lists. Like you can look for asset managers, IRA investors, note investors, real estate investors in your market, in your state. OctopusCRM.io. We've used it for years. We love it. It's so worth the $99 a month we spend on it. Okay, to automate your asset manager investor outreach. Okay, and then of course everything's going to video. You got to realize that this is your best friend, and it's got a better camera than most of you will have. And you get in the habit of sharing. Hey, I'm working on this deal, or did you know this? All of you are smarter than 99.9% of people out there. I know some of you may not think that. You know, I'm not smarter than 99%. Well, actually, most of you are. Maybe it's 95 for some of you. Like Jim Shibley, you're probably only smarter than 90% of people out there. And I'm just joking, as you know. Jim's really smart. But what I'm saying is, you need to share that knowledge. You need to share the deals, the case studies, the stuff that you've done, because people are attracted to you taking action. I'm always amazed when I go to different real estate clubs or networking clubs for something. Like I run the Austin Podcasters Association here. I'm a big podcaster. It's one of our best lead gens. And I get up and talk about who wants to talk about their podcast. Nobody wants to get up and talk about the podcast, or who's launching a podcast. And there's a bunch of people that don't get. I'm like, you have to realize that you need to share what you're doing. People are attracted to doers, action takers, right? If you want people to invest with you, you want to know that you're an action taker. If you want asset managers to send you lists, they need to know that you're taking action. Some of you want to be a secret agent. Well, you can't succeed as an investor and be a secret agent, man. Now, if you've got millions of dollars on your own, by all means, yes, you can. But if you don't have millions of dollars and you need to raise capital, you got to get out and start sharing what you're doing, what deals you're working on, all that good stuff. We're not talking like Days of Our Lives soap opera stuff, but sharing what you do. One of the most valuable things that I do on a pretty regular basis is I record a 1-minute video daily. It could be a deal I've done in the past, a deal I'm working on, a tidbit of the day, a term of the day. It could be all sorts of different things. And I upload, I film that 1-minute video with my cell phone, and then I share it to TikTok. I share it to Twitter. I share it to Facebook. I share it to YouTube. I share it to Instagram. And there's 2 Twitters and 2 Instagrams, so it's actually 7 spots. And then I can also share that to my email list or LinkedIn too. And then Threads is kind of a stupid thing, but I can share those 7 spots. It only takes me like 5-10 minutes to do that. Record it, upload, record it, upload. And I get folks off like so-and-so heard me on Brian's podcast. He probably saw me on Brian's live. Just sharing what you're working on. Tip of the day. Okay. You know, I'll record video, I'll record a short podcast episode, like 5 minutes up to an hour long. And then I share that. I create one video. It becomes an audio, becomes an email. It gets reposted to LinkedIn, Facebook, YouTube, Twitter, and there's another one, and Facebook. So creating one piece of content and sharing it. A lot of us are glad with commenting on people's comments or liking it, but we don't create our own content. So with email marketing, you got to email regularly. I talked about this 4,400% ROI. We use Keep, you can use Aweber, MailChimp is not so good. But like I said, you're going to be email marketing mostly Tuesday, Wednesday, Thursdays to asset managers, right? your investor database, your contacts, your warm market, people you meet at networking or real estate clubs, once a week. And I usually send out my once a week email is Sunday night at 7 p.m. It's usually got a link to Note Night in America on Monday night. If I don't get it out Sunday night, then they get an email from me on Monday. I mean, somebody like Debbie, you and I have known each other. We met at Noteworthy years ago, but you've been on my email list for what? 4 years, 5 years? Jimmy, you've been on my email list for a while too? 5 years, right? Now, I don't send stuff out that I think, I don't send stuff out I want to send valuable information out. Several years, yeah. I'm not sending out like my recipe or that stupid newsletters that realtors send out. Like, here's the best pumpkin spice latte. If you like pumpkin spice latte, okay, maybe you want to do that. No offense to any realtors. But mine's like, hey, here's the deal. I know that Jim's not going to read my email every time. But I also know that I have Jim's text message, that he's on my text message list. So if I have a deal, he might see it that might be able to fund. So I try to work my investor database at least once a week. What are you working on? Oh, here's an episode that we might find Bible. They don't listen. That's great. I get my email. I'm a 60,000 plus email database. It's taken me years. I've been doing this for a while. You're not going to have that. And yes, it cost me about $700 to $800 a month just for my email marketing and my service, because I have such a big database and what we do. You're not going to spend that. Okay. You can spend like $100, $150. Okay. But it's going to be worth it. Like, I make that back. I make more than a 4,400% return back. Okay. You will too, if you're reaching out to IRA investors and database, getting people ready to fund by knowing what the hell you're doing. The biggest mistake, I'll give you an example. I had a guy who runs a real estate fund here in town. He's a fix and flipper. We met somewhere. He came to my office pre-COVID. And so he goes, yeah, I'm trying to raise capital. Can you help me with that? I was like, yeah. I said, first and foremost, how big is your email database? Oh, it's about 5,000. I'm like, okay, that's not bad. How often are you emailing your database about opportunities or stuff? Oh, once a month. I go, well, you got to realize once a month, they're not going to know. Do you send it? And what's your open rate? He goes, oh, it's about a 10% open rate. I was like, okay. Do you send that email again to those that didn't open the first time around? He goes, like, no. Like, why not? Well, I don't want to bother them. Like, if they didn't open the email the first time, you're not bothering them because they didn't open it. All right. I said, also, you got to realize, is every email you send out about a deal or something of value? Like, yeah. Well, then it's okay. Don't send it daily. I think that's a bit of an extreme. But sharing once a week with your audience about something valuable, a deal. I mean, if you got 30 notes, like Debbie, you got 30 notes, you said, you could literally, you've got 3 years worth of case studies there. Because you send out an email about a past deal or deal that you've done, that's 1 week. You got a happy holidays, that's 2. You got half your marketing right there for 3 years, girl. You start making offers on new stuff, that's another deal. Sunday night's a good one. I send it at 7 p.m. And then also, like I said, Tuesday, Wednesday, Thursday for the most part. Okay. And what do I talk about? Every month has a holiday, upcoming meetup or networking event, personal event, past or present deals. Okay. And the reason you mix in a little bit of personal with the business is so people get to know you personally. They don't think of you as a role. You know, some people like, you know, I say all I focus on is notes, but people know that I have different passions. Jim knows I'm a big football fan. All right. I'm wearing a Round Rock Express baseball fan. I'm excited for the playoffs right now. You know, I like to travel. I drink Crown Royal and I like a good cigar. Right. And I enjoy cooking. If you see my social, you see I got some bacon I'm going to be smoking later this afternoon. Okay. I like a little gardening. It's mixing that stuff up. Okay. People like to see doers and they like to see action takers. And it's all shared. You know, we all have different interests. When we get our note mastermind together, about once a year, once, twice a year. You know, we had an event, we had 120 people come out to Orlando a few years back in our mastermind coaching students. And we found out about 30 of the people in there played some sort of musical instrument, guitar, horn, piano. We also found another 28 to 30 of them homeschooled their kids. A big chunk were into gardening. And you have a lot of similar interests that people like to talk about that get interest. So it doesn't just have to be about investing. Share a little bit what's going on. Okay, we're all facing issues these days, and we all love to have opportunities. Okay, yeah, I don't know what you're talking about, Waddell. You know, I don't know who the Eagles are. Are you talking about that JV squad that plays in green that lost the Super Bowl again? Well, it's better than the Cowboys because the Cowboys haven't made it there in years. But the Phillies, yeah, there you go. Castellanos and Harper having great. Here we go. I know Jim's a big Green Bay fan. So if you're going out to a game, take a picture. Hey, I just went to Green Bay. I got a chance to see the Packers play. You never know you're sitting next to the Packers game. I've raised capital at a Texans game or a Cowboys game before. Just get out, share what you're doing. It's fun. It adds a little bit of emotional stuff. Okay. Not emotional, but just it shows a different perspective of what you're doing. Okay. And then you're going to email your asset managers once or twice a month. What do you have on your books? Or, hey, we just closed this deal. Pretty simple, but this allows for you to mail the masses in one and get a 20 to 30% open rate. That's a good starting point. And then you email them again, another 10 to 15%. Okay. LinkedIn, you got to leverage LinkedIn. Make sure your profile is 100% up to date. You got to realize it's really more of a business resume. It used to be a resume for job seekers, but now it's gotten more social with stuff with articles, videos. You can go do live on there. You can have newsletters. I have a new LinkedIn newsletter that I need to get better at, but I've still got 4,500 people that subscribe to my newsletter. I was on a podcast interview the other day with a lady who only has 3,500 connections on LinkedIn, but she has a newsletter that subscribed to over 10,000 people. I'm like, how the heck did you have that happen? She's like, I know, my stuff just went viral. I'm like, that's freaking phenomenal. Okay. You don't have to have the paid subscription. You can keep the free subscription. I only upgrade to the paid subscription once if you're going to really use the extra sales navigator. But it is important for you to turn on your creator mode. Turn your LinkedIn into creator mode. Okay. But it's easy to find investors, bankers on there. And like I said, use Octopus CRM to help maximize the connection. Okay. And here's the thing, only 3% of LinkedIn users post daily. We get a lot of responses and folks from us posting a daily video. They just see us on a regular basis. They get to know us. We become that subliminal. When they think about the note investor or the note guy, they think of me. Okay. And you can also use groups there. Some of the groups are good. Other groups aren't bad, are horrible, but you can connect with people in those groups, which are really good. So especially on the asset manager side, we've made some great connections to asset managers because we're in the same group together. And you can import your list. It's not as easy to do as it used to be, but you can, if you've got an email list, you can upload it to there and connect with those folks there too. Okay. Video marketing. I know people are scared of this. This is not difficult. Use your phone. YouTube is the #2 search engine owned by the #1 search engine. And that's part of what's helped us. We have the #1 YouTube channel with just under 7,500 subscribers because we throw stuff out there, but it's also the second edition of my YouTube channel. I lost my YouTube channel a few years ago, got shut down. Everything illegal. I tried to pay to boost one video and they found it and they just shut me down overnight. I was very surprised. So I've had to reinvent. So I got just south of 1,900 uploads since we started, but that's doing a little bit each day. TubeBuddy's a great plugin. It gives you the best way to upload things. Short videos are doing really well. YouTube Shorts, like 1 minute long videos. All of you are capable of that. But it's 24-hour a day, 7-day a week, 365 days a year advertising. Because if you have a good description and keywords and title, or thumbnail, which doesn't take too difficult to do it, people will send you video. So like when I uploaded, like today, I've got a pretty good channel. But if I go to my YouTube studio, like I got 72, 75 subscribers. Today's morning video saw 43 people, but the 1 minute video I posted at 9:30 this morning or 9 o'clock had 55 views. And some of you opted in from seeing that video this morning. Okay. The video I did yesterday, Thursday on surplus funds, 82 viewers. Okay. Not a lot, but every view counts. And Gary Vaynerchuk, who's a social media guy in New York, a big New York Jets fan, he taught me years ago, you don't need thousands of viewers. You need one person to see your video. That one person. We're all one view away from somebody seeing it and commenting on it or deciding to reach out to you because they see. I have uploaded videos of me walking assets or properties, and I've had actual hedge fund managers see that property because it was the only video of that property. And they reach out to me to ask about that asset, and then I end up buying assets from them. Okay. You do Facebook Live, it's only about a 24 to 40-hour life cycle plan, which okay. I like case studies on there or podcast episodes. LinkedIn Live works really, really well with short video too. doesn't have to be long, 5-10 minutes. You could do it up to an hour on there, but your LinkedIn Live can be short videos. Like I say, short smartphone selfies. These are easy to record and upload straight from your phone to Facebook, Instagram, Twitter, Threads, YouTube. What else I have on there? Facebook as well for you. Pinterest. Ladies, if you're not posting on Pinterest, you're really missing out. I don't post on there. I got enough to do, but ladies, you should be posting on Pinterest. You've raised a lot of capital, okay? I'm a big believer in something called the marketing content or the content octagon. It's like I said before, where we share one piece of content across the multiple platforms. So you're not having to create 8 pieces of content, hence octagon. One piece of content and just upload it. It makes it simple. Photos and stories do really good. You can use Buffer or Hootsuite to share it automatically. You can reschedule this stuff so you not have to think about it. Maybe you do it on Saturday, Sunday, and it gets scheduled all week for you. Not everyone is on every platform. So I raise capital from different platforms because some people follow me on Instagram, but they don't follow me on YouTube. Or they don't follow me on Facebook because Facebook's kind of going down, but they do follow me on LinkedIn. And part of it is casting that net. Would you rather throw one line in the water, try to reel something in, or throw a net in the water? And the answer to that is a net, okay? The best time to have things posted is at lunchtime, 3 p.m., 7 p.m., and 9 p.m. works best because people are sitting there on the couch or getting ready to go to bed, and what do? They're on their phones surfing, okay? And just start with one thing new per week. Take it, upload it. You all are smart enough to get there. And the thing is, if you posted one piece of content per day, in 30 days, you got 30 pieces of content that are sitting out there floating, working for you. And then another 30 at 60, another 30 at 90. You just got to put those lines in the water. You got to put that bait out for people to see what you're doing. That makes sense, everybody? We have a masterclass in marketing that we're going to be teaching in the Q1 of next year how to market your notes and market for assets. Would that be something you guys would be interested in? I guess it's like crickets. Like I scared them all. Some of you would. Okay, good. Well, I'll let you know when we get closer to it. If you're part of the WCN membership or monthly membership, you'd have access to that included with those other master classes at no additional cost too for you. So, all right, let's do this. Let's take a little break, fresh glass of water, and we'll be right back. A 5-minute break, everybody. Just a quick 5-minute break, and we'll come right back. All right, let's get started back up again, everybody. Thanks for commenting there, don't doctor. If you got a YouTube channel and posted any videos, post a video. I challenge you to post a video today. Get off here, take a little video, upload it. Ain't that hard. It'll be valuable to you. And posting is not difficult. All right. I'm gonna lose my voice today. How are we doing on time here? We started at 12, 13, an hour and a half. Okay. So in this session, we're going to talk about business structures, and setting up your business is one of the most important things that you set it up correctly versus incorrectly. Okay. So how do I structure my note business? Very, very simple. All right. You're going to use basically LLCs. You're going to use an entity, LLC, trust, S Corp. Could you use a land contract or a land trust? Yes. I prefer LLCs. I don't want to keep more than $1 million in asset value in a single entity. Now, if you're using, like if you want to use separate LLCs too, for investors that are going to spend a $250K or more with you, I would set up a separate LLC just for that investor or that deal. I'm going to keep my deals separate from the ones that we have partner deals or existing. If you have an existing business, like if you're a realtor, you want to keep that real estate LLC separate from your rentals. I keep my performing notes for myself separate from my non-performing. Same thing. I have an educational marketing company that's separate from a management company. So yes, you can use one LLC that you have right now, but you got to think like you're in business. And business, you're going to have multiple LLCs. Okay. And can I just use my SDI rated? Yeah, you can use it to buy a note, but when it comes to partnering with people or raising capital, it's not smart to just put everything you own in your IRA because everybody can track you down like I just did the county records. Okay. Using LLC is going to help you with asset protection. It's also going to protect you in case of a Consumer Finance Protection Bureau fine, in case the borrower files a claim against you, which has had happened. Not that big a deal, but if you end up doing something stupid, you don't want to do that. And also, some counties in the country are suing the self-directed IRA companies for back taxes, like Michigan or what is that? Wayne County is doing that. And so Quest and Equity Trust won't let you buy a note in those counties in their name. That you have to use an IRA to fund in that area. If you're using funding or joint venture partner, yes, you can partner with it, but it's best to just use an IRA LLC for checkbook assets, make things easier. And I wouldn't trusts are great temporarily. I would use trust with with subject to deals all day long, but I would not use them when I'm buying notes. Sorry, I just think LLCs work a whole lot better for you. And yes, you don't need to have an LLC in every state. You just need to register your LLC in the states that you do business in. It's very easy, $50 to do it. Okay. You need to document your stuff. Having an LLC is not just a trip to the Secretary of State and a tax ID number. And yes, you need to document what you're doing, even if you're a single member LLC, in case you ever do get sued. This is thing I get people, well, I'm a single member LLC. I don't need to document my minutes. Well, yes, you should, because it's a good habit to do. You need to document transaction, leases, joint ventures, offices, vendors, partnership, leases, reimbursements, trips. It's important if you're going to have your LLC pay for anything to document it. So if you ever do get sued and you got to go in front, they want to say, are you operating as a business or a person? If you don't have any of these minutes, or you don't even have your operating agreements, then they're going to say you're operating as an individual, and you may lose. You not only get to lose in court, but if you ever get audited, you're going to lose the right for a lot of tax deductions because you're operating as an individual. Okay. Now I'm not an accountant or CPA. I just know what my CPA and accountant harp on, and they're like, use that. Okay. Now, who can help you? One of our vendors that we work with on a regular basis is Laughlin Associates. Got 50 years of creating and keeping LLCs liable, clean. They help with asset protection and structuring deals. They manage our trusts, our living trusts, and stuff like that. They have a corporate veil protection that's phenomenal to use. They can set up in every state you need them to. They'll get a phone call monthly to help you track and document what's going on with your LLC. Different asset protection plans. They also do a biannual Magnify Your Wealth Summit. They have one coming up next month in Orlando. It's a great 3-day event, one of the best 3-day events I've ever been to when it comes to asset protection. And we all need to know about asset protection, because you got to protect your assets, ladies and gentlemen. At some point, something's going to happen. And so great video for you to watch, learn more about that is the Court Veil Protection, bit.ly/Court Veil Protection. Aaron Young is a friend of ours, dear friend, one of my closest confidants, definitely part of my inner circle. You definitely want to talk with him and listen to him and his team. Great stuff. You will not regret working with them or using them to help set some stuff up for you. Okay. I'm not an attorney or an accountant. That's why I rely on those experts to help me in Laughlin Associates, who I do. I don't deal with Anderson Consultants or Legal Doom. I deal with folks that I can get on the phone and talk to, or if I need to get my accountant or my attorney on the phone with them to help set stuff up properly, and it works really, really well. And they're very, very comfortable working with note investors. We've been one of their biggest referrers of new business every year in and year out, because they just do such a great job. Okay. And you go to courtveilprotection.com, check out that website. They're always offering a special discount. If you call and say you're a Scott Carson student, they may have a better deal for you too, as well, which is pretty cool. All right. Moving on. Yeah. All right. Let's get into exit strategies, shall we? Because you want to know how to make money when you're looking at deals. So different exit strategies. All right. And there's roughly 10, 11 ways to skin a note. All right. We did a longer form video on this. You can check this out. We'll go through them briefly and stuff like that. If you have some questions, we'll take some questions at the end here too. But exit strategies require going through it a little bit more. And some deals will have multiple exit strategies. You don't know which way it's going to go to begin with. Some we thought we were going to end up getting reperforming, we foreclosed. Some we thought we foreclosed, we got reperforming. Some we thought we'd do both, and the borrower just deeded the property over to us and walked away. Now, one of the proper ways that most people get started is wholesaling notes. Okay, it's flipping contracts. You literally can flip a contract for as little as and make $500 or all the way up to, like if it's a performing note, 1% of the funding amount is pretty normal. If it's a non-performing note, you might get up to 3 points. If you're really getting under contract at a great price, you could do 5, 10. I've wholesaled commercial notes for 100 grand in profit before. Just depends on how good a deal you're getting and what the deal will hold. If you're using somebody brand new, you don't know them, you're going to really do a double closing. You're going to have basically get a contract from the seller, and then you're going to turn around and create a contract to your buyer with roughly the same funding date, but a different price amount. And then as you get due diligence from the seller, you're going to pass it on to your buyer. Okay. And the thing is, you're going to have your buyer wire money to your escrow account, or they're turning for $500, you set up an escrow account. They're going to turn around and wire the funding amount. So if let's say you're going to buy a note for 100 or 75,000, you got a note buyer that you're going to wholesale it to for 100 grand. Okay, you're going to make $25,000 in profit. So due diligence, they're happy, boom, same closing date. I would actually make your buyer close a day or two before when you're supposed to, okay? And because that way, if there's any delays or overnight stuff, you're okay, all right? So basically, buyer wires 100 grand to your escrow account. You turn around and wire 75 grand to the seller. Seller turns around and overnight sends you the bill of sale. You turn around and create your own bill of sale to the buyer. They're going to send the assignment, a mortgage and transfer documents, usually send you a scanned copy within 24 to 48 hours. You're going to turn around and create a new, if the seller leaves it blank, great, you just fill in the buyer's information, but they're probably going to put your information in there. You would then turn around and create a new assignment that goes from you to them and send it over to them, okay? But double closing through contracts, if you understand, let's say you're buying a note or I'm wholesaling, I'm not going to do a double contract. I'm just going to make you sign a wholesaling fee agreement that you're agreeing to pay me 5 grand or 1 grand or whatever it might be. And then you're going to have 2 sets of wire instructions, either wire directly to the bank and then pay my commission. I can either give you a credit card to pay off of, or you're going to ACH me or drop me a check. On some of these bigger stuff, get you a real estate attorney that has an escrow account. Can be anywhere, but get that to do that, okay? Jim offers to help do transactional funding to anyone who's trained by you if needed to double close. Well, we don't need transactional funding. It's not a overnight thing. Usually a double closing is basically this in a note deal. It's not a real estate deal. I get you're doing transactional funding in your real estate deal, but with us in the notes, it doesn't need to be. It's not the same thing. Okay. You just need escrow coming in from the seller to come into stuff like that. Now, transactional funding, if somebody's going to fund something, how long are you willing to let money sit out there, Jim? 30 days? A week? Yeah, see, a few days. We don't need that in the note business. And I appreciate you. A few days, you're not going to need. We don't need that in the note business because you're going to either have money coming in or money. It's not like putting an earnest money down and stuff like that. Just we don't see that. If it's if it's in a couple of days, you might just wait for the funding to come in from your investor. Okay. All right, moving on. Good wholesalers is the biggest thing. Good wholesalers, you know what the deal is and the numbers. You know what the solution is, what the true the exit strategy is, and can help your buyer make an educated guess. What's unfortunate is most wholesalers don't take that time to understand the due diligence, the profit margins. They just throw shit against the wall like spaghetti. That's not going to make it effective. You got to understand. This is why I also tell wholesalers, like, listen, if you're going to be a good wholesaler, you can raise capital. You just got to change your marketing aspect. Instead of offering up to buyers to buy your deal, that they actually end up funding your deal. Okay. And we have did a note wholesaling class this last March. Very successful. People loved it. We went through the ins and outs, a full day of us going through wholesaling. It's exclusive for our WCN members. It's included. Then we charge $199 for it or $299. But it's included with your monthly membership. WCN, if you go to thenoteumbrella.com, this is something included. All right. So part of our monthly membership, you can watch the replays and watch that again and again. We include all the documentation along with it, stuff like that for you as well. So it's a 4-hour long class, and it was very, very successful. People really, really loved it. Okay. Second strategy, if you're not going to wholesale it, and you buy the note, and the biggest thing is to get the borrower back to start paying again. They start paying. The servicing company is going to start asking the borrower, hey, can you start paying on that loan again? Start paying on time. Reinstate the loan. You're going to want you to have a licensed servicer handle this. You don't want to be collecting payments. You don't need to be doing the borrower. They're collecting the payments. They're documenting everything. They're doing the borrower outreach, or we call that right party contact, calling home, calling businesses, sending out a door knocker if need to. The great thing is you're instructing the servicer of what you're wanting to have happen. Okay, can you reach out to them? They will do so much per month, and sometimes you don't even need them to do anything at all if the borrower starts paying. But you're going to start paying. I'm willing to accept the existing payment plus $100 a month or $200 a month to get borrower back on track. And that's a great thing if you can do that. I always like to get some skin in the game. If you do a loan forbearance agreement, you know that was very common with banks to do that in 2020 and 2021. 2022, taking the 6 or 12 months they're behind and putting the face amount of the loan, just extending the loan. Okay. But the first exit strategy, always get the borrower back on track so you're making cash flow. Okay. Third thing, strategy would be to do a loan modification. The borrower can't make their existing payment, or they don't like the interest rate or something like that. You can modify the loan. But what we do is we put people into a trial payment plan for 6 or 12 months before we officially modify the loan. We want to make sure the borrower can make the payment plan before we adjust the terms. Okay. Now, we could do lump sum or extra payments on it on a monthly basis. We usually do the trial payment plans for 12 months. I'll talk about that in a second here. And we can adjust the balance, forgive, or reduce back payments, adjust payments. We can do a whole variety of things during that trial payment plan before we adjust things, whatever makes them work well. What many banks did years ago is it was, okay, they would drop your interest rate from 5% down to 1%, and then 1% for a year, 2% year 2, 3% year 3, stuff like that. Well, we don't do that, but that's what a lot of them did. The reason we never go straight to a loan modification before 12 months is because the IRS will evaluates that as a loan mod, and it's a short-term capital gain. So if you buy the note at say 20 grand and you modify it from 100 grand down to 80 grand, the IRS wants to tax you at 80 grand, even though you've never received a dime yet. Okay. So it restarts. It also, once you modify that loan with terms, it restarts that time frame. So if you modify it and adjust terms and the borrower misses the first month, it doesn't pay, guess what? You've got to wait another 90 days for it to go in default to start it all over again. That's why we don't do that. If we do a trial payment plan and they miss a payment, their time clock doesn't stop. It's been stalled, and we can start that foreclosure or continue with the foreclosure process. Okay. We require the borrower to sign the trial payment plan and loan modification docs, and we send out a mobile notary to do this, or via a DocuSign or something like that. We don't send out paper copies most of the time by themselves because the borrowers will drag their feet in getting that stuff back to you. Okay. Four-way, if they can't pay, can't modify, we'll do a loan payoff. And this is where the borrower pays off the loan. Okay. We'll sometimes do a reduced payoff settlement. There's some borrowers who've qualified for community payoff plans or community development plans, stuff like that, or they've got, they're trying to sell the property, and we'll do a short sale. We'll talk about that next. But hey, I'm going to have some money coming in. Can I get a discount if I can pay you off in 90 days? Okay. And we'll do that for them. You got to realize if they're not paying on time and it's really less than 100 grand, they're not going to go out and get a bank loan for the most part. They can go get a hard money loan in some cases, but they're mostly going to be cash, maybe a private investor, maybe a family payoff or stuff like that. Or if they've got retirement, cash out retirement to pay off. Right? Where are you going to get the funds? Yes, we'll do that, but you got to show proof of funds and where the money's coming from. Otherwise, if you can't prove up funds on that stuff, then we'll go to a different route. But the servicer is going to handle the payoff. They're going to send the money to the servicer. Servicer is going to do a release of lien and then send us, the bulk of the stuff after proceeds. Now, if they can't pay, they do cash settlement. We'd ask them, do you have somebody to take over the loan? Do a loan assumption. Yes, you can allow someone to assume the loan. Or like do you have somebody who wants to take over payments subject to? We'll allow you to sell your house on subject to as long as you start making payments. Family member, friend, potential investor. We'll actually have that borrower fill out a new loan qualification form. In most cases, we want to get who's making the payments, their information. We're not refinancing. That's the big thing. They're just taking over existing payments. So it's no longer, you don't have to hire a new NMLO to do that, RMLO to do that. Same thing when you do a modification, you don't need to hire a loan officer to do that. You're just modifying. You're not creating a new loan. Okay. Usually when a loan, you're keeping existing terms, unpaid balance, interest rates, they're just taking over payments and stuff like that. And we're fine at that point with the borrower quit claiming to the new note payer. We just need to know their information. Okay. And a lot of times it's just family members doing this. Okay. Maybe it's a death or loss of a loved one or elderly. So, family takes over it and we're fine with that. Of course, we also allow people to short sale their property. And that means us sell the property in the MLS and us take a little bit of loss based off the legal balance. We're not going to take a loss property wise, but we'll allow them to sell the property below the payoff. Of course, we usually buy these non-performing notes at huge discounts. So we'll allow them to sell it, and get it up to them. Now we become the bank and we get to approve the short sale. We're the fastest short sale negotiation company in the country. Okay. We'll tell the borrowers, like, if you're going to list this for short sale, have your realtor listed on the MLS at 85% of as is value. The reason we do 85% is because we want to get foot traffic in there and maybe end up in a multiple offer situation where that bid gets bid up to 90-95%. We're taking less of a short. Okay. Now, if there's no booking or showing appointments, we don't let the borrower dictate that. They got to be able to see the house whenever. Okay, that's the biggest thing. Some people, I only do it around my work schedule. No. If you want us to approve this, people got to be able to see the house at any time. Okay. If we're not getting any foot traffic in the first 2 weeks or 3 weeks, then we're either going to move to the next level, which is to do a deed in lieu of cash for keys. And we do have the right as a bank to reduce the commissions to 4%, 2 on each side instead of 3. Because if no showings in 2 weeks, we'll move to a cash for keys or deed in lieu. And if you wanted to, you could 1099 the borrower for whatever you had to write off. We don't do that. They're willing to work with us. But if they are a pain in the ass and we do have to foreclose and we don't get what we pay, we will 1099 them for the remaining amount. So it's a great way to offset some of your taxes. Okay. Deed in lieu, cash for keys. Basically, the borrower signs a deed over to us in lieu of foreclosure. We're letting them walk scot-free as long as the property is in good condition or in swept. A lot of people will move out of the houses. I don't know why they move out of the houses, but they do, and that's okay. It's sometimes it's good cash for keys, sometimes deed in lieu, depending on the state it's in. You may just have to foreclose. Okay, but we'll forgive the debt provided that they deed the property back to us. We start cash for keys at $500 and would go up to what it costs us to foreclose. We're not going to go above foreclosure cost. Now, we will do that in some cases if it's a longer foreclosure. Like I gave a borrower 10 grand in Florida because it saved us 7 months. And there's a ton of equity. So I was glad to give them 10 grand for cash or keys for them to walk. Okay. But we want to make sure it's clean. It avoids a foreclosure on their credit. So it's just late pays. So basically, if they have 24 months of on-time payments after that, they can go get a new mortgage. But if it's a foreclosure, it's on them for 7 years. You got to make sure there's no other outstanding liens on the property above yours. Otherwise, those liens will fall into first position. So you would do a consent to judgment at that point, and a cash for consent to the cash in a deed in lieu. And that just shows the attorney or the judge that when you're foreclosing, hey, the borrower's consented to the judgment. Let's go ahead and finish out and wipe out they do the foreclosure to wipe out the second. But you always pull title to make sure there's no other outstanding liens, and then always have somebody go by and take internal photos of the property, your realtor, your local locksmith, stuff like that. Okay. You can always, when you buy this note, you can sell the note to another investor in case it's a longer foreclosure process. You'd actually, by buying the note and working with your servicer, you've actually added value knowing which way the exit will go. This happens a lot of times if you're dealing with troubled borrowers and you don't live in that state, or your goal is more cash flow and you don't want to do a rehab on a property. This happens quite a bit. Many funds will buy the notes, buy a portfolio of non-performing notes. They'll work to modify, forbearance, whatever, for 90 days with those borrowers. They can get those borrowers modified, making payments. Great, they're keeping that. But if after 90 days, and they're going to go the foreclosure route, they'll sell it at 10, 15% of what they paid for the note to try to sell it in 120 days. So that if they make a 10% on what they paid for it in 120 days, that's like a 40% annualized return. Okay. Because they don't want to do the rehabs and attorney fees. They'll let somebody else do that and sell it as there. Okay. You can sell to local investors too. If you got somebody who understands note investing in an area, we've done this marketing via meetup groups, Facebook groups, targeting and say, hey, we've got a note for sale that you have to foreclose on and go from that. As a handyman special, the careful thing about posting a handyman special is most people think they're buying the property instead of buying the note, and you've got to educate them on that. And we always like to work with investor-friendly realtors because they may have people to be a pocket listing for them that they can feed to one of their potential investors and add value. Okay. Number 9 is our least favorite strategy is to foreclose. It still happens a chunk of the time. We talked about this earlier. Non-judicials are faster, cheaper, and usually starts at $1,000 or more. That would be like in Texas at 1,000. Okay. Judicial foreclosures, they're going to start at 2,500 plus. They're longer process, 6 months usually, and a minimum upwards up to 3 years. Since we're the bank, we get to list what the attorney's going to ask us what our bidding instructions are. And so we're going to try to sell at the foreclosure auction most of the time. And we're going to tell the attorney what we want to bid on. So if our payoff balance, the legal balance, is less than the property is worth, we'll say, hey, try to get full payoff. Start at 70% of payoff and go from there and work your way up. If what's owed is more than the property is worth, then we're going to tell them, hey, go just 70, 80% of the value of the property. Okay. So that we want to make sure it gets sold, because we don't sell it, then we got to take it back, then we got to handle the evictions, then we got to do the rehab. If I can get 80, 90% of the foreclosure auctions, it's just as good as having to take the property back and do that extra work. But if you do take it back, it becomes an REO. You can do whatever you want with it. Sell it, rent it, owner finance it. The foreclosure is going to basically wipe out and clear your title for you. Okay. But make sure if you take it back, you place a lien on the property. If you use other people's money or even your own money, slap a lien on that property, protecting that equity. Because a lot of times there are unscrupulous companies out there that track foreclosures. And when they see foreclosures, they go slap an $8,000, $10,000 lien on the property as a mechanic's lien, and hoping you just pay that lien off versus waiting the 90 or 120 days to get it wiped out. I've seen this happen, and I've had this happen several times on foreclosures to us. In Houston, Houston happened once, and in Florida happened once. So careful about there. Okay. Number 10 is basically reselling the reperforming note. So if you work with a borrower, get it back on track, 12 months of on-time payments, you can sell that performing note. Okay. You've got cash flow. You bought it at 50 cents on the dollar. You've got them paying on time for 6 to 12 months. The best thing is to have a third-party servicer. You should all use a third-party servicer who's collecting, and that way you have an independent third party who's showing the payment history and showing the servicing notes that you don't have to keep up with. Now you can sell off a partial, maybe it's 12 months of P&I payments, and get a partial payment or you can sell off the full thing. But you can only, if you've got this thing on a trial payment plan or a modification where they're paying extra per month, you can't sell it unless it's paying extra each month for the life of the loan, which most of the time it isn't. You're going to sell based off the P&I amount, not the extra. Okay. Now, if it is a modified payment amount, you modify the loan and they've been paying it, that's different, but not the extra, skin in the game. And you're going to sell it off of the UPB most of the time, not the legal balance on the performing side. Just keep that in mind. The borrower may still be high, but if they paid 6 to 12 months on time to get caught back up, it's basically considered a reperforming note. Okay. Now, 11 is bankruptcy. Bankruptcy loans, most investors will avoid bankruptcy properties. We actually like bankruptcy notes because it's a beautiful thing. Because not only do we now have an attorney to talk to, the servicer can help with us, but we also, if they file bankruptcy, they've disclosed basically everything. When somebody files bankruptcy, they've got to fill out a 9-page bankruptcy disclosure form, which tells everything about what they owe, what they have as far as investments, savings, all that stuff. Okay. In a BK Chapter 13, it's debt restructuring. And you can always pull up your BKs by going to pacer.gov and look at the bankruptcy report. This is going to be basically a payment plan, a 5-year payment plan to get caught up, not only paying their existing payments, but getting caught up on the amount they're behind on. So there's a lot of firms out there that love BK Chapter 13s. You also have the right as the creditor to approve the plan if it is a bad plan. Okay, if it doesn't make any sense, you can say, no, this doesn't make any sense. Let's discharge this. And then you can go finish the foreclosure. But there's a lot of BK Chapter 13 firms that are going after these and paying 80, 90% of the unpaid balance to make it worthwhile. And like I said, they start on the payment plan and then follow through with it. Don't follow through with it. You can always discharge it, kick it out, and then finish the foreclosure. There's a BK Chapter 7, which is basically a liquidation of debt. Basically, the borrower family, they don't get to keep the house. They've got to deed it over, or you finish the foreclosure and go from there. All right. Any questions about exit strategies before we move on? I know I covered a lot there, and sometimes it's like a choose your own adventure when you're working through that stuff, but just keep in mind, your service will help you out, your attorneys, and as always, pick up the phone and give me a phone call if you're working through your first couple of deals. I'll gladly give you some guidance on where they're going to go. Okay. Good. All right, what I'm going to do, guys, I'm going to stop the YouTube. You're watching live on YouTube. I'm going to start a new one there because I'm coming up on my 2-hour peak on that, and I don't want to miss out on the 2-hour peak. So I'm just going to kill the YouTube stream and then